taco pad is like, that was the revolution. It's like, oh, I learned something from
Now you can sleep on the beach.
Sleep on hummus, right? You sleep on
Fit perfectly.
Oh, yeah. Now we have people asking to borrow.
I have to. They're getting bigger.
Right, yeah. Bigger, thicker.
Also,
But even they had a picture this week from 2024. It was Kelly as chair. I'm like, really? It's 2026. You guys haven't taken a photo in two years?
Aspen Times.
Aspen Times.
Yeah, it's just, they don't have a museum.
Gateways, names, service,
What are you talking about?
Good afternoon. It is Tuesday, June 23rd. It's 1 p.m. Sorry, we're a little tardy this afternoon. We had a joint lunch up in the cafe upstairs. We are joined by Julie Nelson, Daniela Angelova, Liz Woods, and we did not move you. Audited financials from 2025. Thanks for joining us.
Yes.
And Paul, thank you for joining us online.
Thank you. I'm Liz Woods, Finance Director, Treasurer, and Public Trustee, and Julie Nelson and Daniela Angelova are our controllers, and we have with us today Paul from McMahon & Associates, who's the partner on our audit. So I am going to hand it over to Paul to get started. Thanks, Paul.
Hey guys, thank you. I'm actually just down the road working at the town of Carbondale right now, so hopefully you can hear me okay, and I'm gonna actually share my screen. So I am a partner with McMahon & Associates. We're a CPA firm. We audit, I think, 15% of the counties in the state and pretty much all the governments west of Silverthorne, maybe. And I'll just briefly first walk you through the process. And so when we do an audit, we schedule basically 6 people for 2 weeks. We schedule one time before year end and one time after year end. And the time before year end is meeting with your departments and understanding your internal controls. So this is kind of all your documents on internal controls where we're going through and we're trying to understand how do dollars come in, how do dollars go out. So like this would be airport, assessor, AP, kind of so forth, so on. And each of these, we basically meet with one of your staff members and understand the process, the software, the authorizations, who does what, and then we choose one item to walk through and verify that what they've told us is accurate. And what we're looking for is kind of conflicting duties or maybe weaknesses in internal control. We're also reading all your minutes and kind of going through that information. And that's kind of the before year end work. And then after year end, we're meeting with your finance team, and they're providing us all the information across all your funds as far as like cash and investments. So this would be your cash and investment section. Each of these is a work paper. And basically we want to make sure if your financial statements say you have X dollars in the bank, we know it's in the bank, follows your investment policy, follows state statute. We send bank confirms, things like that. Same thing with the receivables. Somebody owes the county money, we want to make sure it's followed up on. They're getting billed timely. When money comes in, it gets deposited timely, it gets coded to the correct revenue account. With capital assets, we're tracking kind of all your capital assets, making sure we're adding it when we make a purchase, recording depreciation, carrying insurance, things like that. Payables, if a payable goes out, it seems reasonable to expect that it's related to county business. It's paid timely, we're not paying interest, late fees, and it's coded to the correct account. So when you look at your financial statements, you can see X dollars is spent on payroll versus a capital asset or something. Payroll, we're going through all your payroll policies and what you report to the IRS, making sure that all those documents are following the appropriate board approved policy, and the amount that's reported as payroll on your financial statements is correct. So each of these is a work paper, and then you can see there's various notes there where we've sorry, I haven't synchronized that, but there's various notes here where we're saying, oh, next year let's do this, or let's consider this in that section. Same thing with debt. Virtually every government has various debt obligations. When you issued those debt obligations, there were a lot of promises made, so we're making sure those are all handled appropriately and reported correctly. We go through all your leases, subscription agreements, revenue and expenses, insurance, public health. Colorado Public Health and Environment use the audited financial statements for your landfill, for closure and post-closure costs. So we have kind of some calculations on that. And then there's just various ballot questions that you've had in the past where promises were made to the electorate on how you'll use dollars, things like that. And then a single audit portion. So when you look at the process, the reason your staff probably is exhausted is you can see there was 925 different work papers that were pulled in and are part of kind of our documentation of the audited financial statements. So it's not a small process, and there's probably easily several hundred more that we don't scan in, but we do just look at and kind of document with a check mark. So that's the process, and the goal is ultimately to be able to produce audited or verify that your audited financial statements are correct and they can be relied upon by all the parties that use it. So the parties that use your financial statements are going to be, I know it's there for the BOCC and the electorate, but it's going to go to all your bondholders, to the SEC. It's going to go to your banking relationships. It goes to the federal government for compliance, and then there's a lot of state departments, like I mentioned, Public Health and Environment use it for the landfill. State auditor uses it for compliance. Various other agencies use it for grants. But we want to make sure that all the numbers in here are correct. So you file what's called an ACFR, so governments file two types of reports. Larger governments tend to file an annual comprehensive financial report called an ACFR. A lot of smaller governments file general purpose financial statements, but the ACFR has a lot of detail in it. And it's covered by an independent auditor's report. So that is our report where we're independent and we looked at 960 different work papers, and we know that the numbers in here are correct. And then your staff does the additional step of sending it to Government Finance Officers Association. And historically, you've gotten, you can actually refer to your staff as award-winning finance team. And so they'll review that again this year, and hopefully we'll get another award for 2025. Overall, I'm not going to spend a lot of time going into the financial statements, other than to mention it is covered by a clean or an unmodified opinion. You know, they're 183 pages long. If I had my choice, I could probably narrow it down to less pages, but that's because there's sections in here for all those different parties that use it. You know, there's a whole section in here for like the federal government, for all the federal grants you receive and things like that. I don't think there is anything that would be considered a financial surprise to you guys that you're not aware of. You know, your budget process is very solid, and that kind of ultimately drives the financial results. There is a board letter. Well, I guess, is there any questions on kind of the process or how we get to this financial report first?
So, two questions, Paul.
Sure.
First one is, so when we're bonding for the Solid Waste Center for the airport, are we pulling out from the 2025 from this itself and then providing those as audited financials to the bonding authority?
So that's a good question. I'll answer that one, Paul, actually, because I've been involved in this process.
Yeah.
We issued the Solid Waste Center bonds early enough in the year that we didn't actually use this ACFR for it. We provided them basically kind of unaudited amounts when we went for those bonds. The reason we actually had to push back the Healthy Rivers and Streams debt issuance is because they felt that we needed to have the completed ACFR in order to do that issuance because of the timing of that completion. That's why we kind of push those bonds back. So by the time we issue like the airport debt, we would be using this as a document as well, or potentially, depending on when we issue that debt, potentially next year. So it just depends on when we would issue that debt. Yeah.
And the follow-up unrelated is, so how do we tie the financial reporting to risk? So in other words, if we have an increase in our capital assets, all of a sudden we bought another fire truck, $1.5 million. How does that shows up in our financials then show up in our risk reporting? And sorry, Paul, if these are not for you, I'm looking at Liz, but how does Bergman then know, oh, my portfolio's grown, I need to make sure we're properly insured based on the new assets that the county's acquired?
So I'll let Paul talk to like the
Yeah.
audit piece of that, and then I'll talk
Thank
to
you.
kind of the internal piece if you want to, Paul.
Sure. I'll just go back to your previous question though. So normally when you issue debt, they will include the most recent audited financial statements in the sale document that goes to all the bondholders. And, you know, all the work your staff does, and honestly, I'm going to shout us out to the work that we do, ultimately helps sell those bonds, hopefully at a reduced rate. And you guys have a very good bond rating. And so that's all kind of part of that process that's behind the scenes. As far as risk goes, you know, normally, regardless of kind of the type of insurance, they're going to want to look at audited financial statements, you know, whether you're even if you're self-insured with reinsurance or pools, they're going to look at total assets. But the problem is the asset value in there is at cost or book value, not necessarily market value. But they still use that kind of as a starting basis. Same thing with, you know, cybersecurity and those type of policies. They're all looking at audited financial statements and determining helping determine what's their appropriate risk profile for anything that's underwritten. I don't know if that answers your question specifically.
Yeah, I mean, I guess where I'm going is my concern is that we have a book of business. So whether it's this physical building, how do we then carry that from an insurance standpoint? And I think you alluded to it, which is if we're carrying it at cost or book, but we know that we can't construct it what we constructed at 10 years ago, how's that showing up in our risk portfolio?
Yeah, I
And
think.
so are we properly covered is really, so sorry, we're sitting in stage 2, we're about to be stage 2. How does what you're doing here go into the other silo over here?
Yeah, and I think that's a great question, and unfortunately, I can't speak to it very well because that's going to be more of a question for Brett. But we do work closely with his team as well, and we do, like, as we have new assets coming online, that process goes through his department. So unfortunately, I can't speak to the
So
specifics
stay
of that.
tuned, Brett will be here next week.
There
Yes,
you go.
okay.
Yes.
Fair
So
enough.
apologize that I can't speak to more specifics there.
Yeah. No, I appreciate both your answers. Thank you. Any other questions at the board? Keep going. And does the rest of the team want to join us? Because there's only 3 people in the audience, and you're welcome to fill in the seats and join us at the table.
How about I will introduce them just so
Okay.
that, because they are, part of the finance team. So we have Gabriel Galicia, who's one of our accounting supervisors.
Yeah.
He oversees grants. And Mara Marar is one of our accounting specialists, and she oversees all the capital assets. So the capital asset piece is a lot of other things too, but that's one of her areas. And then Ann Driggers is our chief finance and administrative officer, who kind of oversees all of us.
Thank you for joining us.
Yes.
So I'm going to jump into kind of the next part. The vast majority of kind of our work is verifying the numbers on the financial statements, but we do provide a letter to the governing board that just has certain items that we have to communicate to every board. And you want to keep in mind when you're doing an audit, we're meeting with every department, we're looking at all kinds of transactions. You're always going to have recommendations. In fact, you should probably be a little suspicious if you didn't. Certainly for an organization Pitkin County size, so I'll just kind of walk you through some recommendations that we have for your edification. We have to communicate kind of what accounting policies are out there that changed. There really wasn't any significant accounting policies, sorry about that, changing this year. There is some pretty significant ones for next year, and the Colorado State Auditor will send your finance team a letter on that. But we already kind of have scheduled time to work with your staff to get some new accounting policies up and running. The second part of that is what's the biggest estimates. Years aren't unusual for any, for your county is pretty typical for kind of what type of counties we audit, which tends to be resort areas with airports. And you have kind of the same estimates that they have. Sometimes you have hard to estimate items like maybe a environmental liability or legal liability. Years are we going to collect our receivables? Historically, you have. How long will your assets last, but you're following standard industry practice? We actually you have an environmental team that estimates closure and post-closure costs, and then we have to provide certain calculations to that to estimate a liability, and that's part of what goes to that Colorado Public Health and Environment. But, the estimated closure and when it's going to close and what it's going to cost, there's obviously a lot to that. How many wells do you have to drill and how long do you have to monitor them and all those type of items. That's an estimate. But again, you pretty much follow industry standard. And then any certain legal agreements you have, like leases, we actually have to discount that to present value dollars. So if you had a lease that was 10 years where you were the lessor and somebody was paying you, we would have to discount the payments out 10 years from now into today's dollars, but none of that is really unusual. No difficulties in counterperforming the audit. It is not a small task. You saw 900 work papers, but your staff, uploads everything and really is good at getting us everything we need. So we certainly appreciate that. Corrected and uncorrected misstatements, that's kind of what journal entries did we have, or what changes did we have between kind of when we started looking at the data and when we had it. You can kind of see these are basically the journal entries that we posted. None of them are systematic in nature. They were all kind of one-time things where something changed. Like you will see, sorry, I'm at the town and the phone's ringing. You'll see as an example, like when you have construction, maybe the retainage didn't get recorded, but those are the journal entries that we posted. The one that probably was more of a concern was some certificates of participation got paid once through an ETF and once through a check, but that got caught and fixed. And then no disagreements with management. Your staff signs a management representation letter. And then there are some recommendations. So the first is pooled cash. The county is, making great progress and kind of trying to get that dialed in. It's, hundreds of millions of dollars kind of coming in and out. And we noticed that you had hired an internal auditor. And one of the things we'd love to see is kind of have that auditor involved in the reconciliation process. And I think that'll clean up some of those. So, my example on here is the ETF and a check going out. That would be a good thing for kind of the internal auditor to look at. If I showed you the cash rec, your eyes would probably spin back, but I think that would be a normal place where they would spend some of their time. And then you can see kind of the plan for management's plan for kind of addressing that. There are a lot of stale checks on there, which are just checks that have never been cashed, and every now and then you want to clean those up. Basically, you'll send them off to Great Colorado Payback, at least if it's required, and then the state will publish a list of who they belong to. Landfill accounts receivable, that is kind of more of an ongoing item. The amounts kind of increased last year, and you can see there's kind of a schedule there of amounts that they increased. And I think we just want to get that process dialed in on your software where we're following up on any delinquent amounts where people haven't paid on their landfill bill. That's kind of a common problem at counties, but it's nonetheless something I think that that department could kind of assist on following up on those receivables on a little better timely basis. And then the next one is really we would change the how you treat the school district money that for USDA Forest Service roads from a custodial fund to a special revenue fund, but that's kind of inside baseball. It doesn't really necessarily make a difference to dollars in, dollars out. It's just kind of where it's reported. And then an FYI about the new standards that are coming up, just so you're aware that we're aware of them. We keep our eyes pretty close on the Governmental Accounting Standards Board. And even though the state auditor is sending out letters saying, hey, FYI, this is coming up, we have time scheduled with your staff to kind of go through what's going to change for next year's report and how that should be implemented. So what questions can I answer on kind of the recommendations?
I'm good. I've done this a few times. It's nice to see you again.
Yeah.
And we
likewise.
apologize for getting this to you so late, and we appreciate your
I have one
flexibility.
question, but it's specific, I can ask it later.
Is this a typical list of recommendations?
So it has changed year to year. It kind of depends. We've had, for instance, the cash reconciliation item has been on there for several years now, but it has changed over the years because we are getting better at that. And so the way that it's kind of showing up has kind of changed over time. Last year it was considered a material weakness. This year it's no longer considered a material weakness. So we are working on those like those heavy items first, and so that was kind of one of the things that we focused on this year. And then, for instance, that USDA one that he was mentioning, that was a new one that kind of was just discovered this year. We had a new manager on our audit this year from Paul's team, so sometimes that helps to have kind of new eyes on things because they look at things in a different light. And so, you know, a lot of the things I think that came out of this year came because we had some new eyes this year that asked different questions that, you know, we hadn't necessarily looked into in previous years.
Yeah, I think it's pretty typical, and like Liz said, we statistically you kind of get the best audit if you have somebody new on the engagement and somebody existing on the engagement, and so that's kind of the policies we follow internally as a firm. So you'll always have kind of at least one fresh CPA on your engagement and one that has been on the engagement before. And so some of that is, yeah, just standard rotation of staff.
Thank you.
How do we track then the dozen or so recommended changes? So do you come back to the board, or they're just, we look at them again in 27, we say, hey, how do you do on those dozen metrics that Paul
So-
recommended to clean up on?
Yeah, so I think there was only 4 or 5 items that were actual recommendations. So that's up to this board. If you would like for us to come back and report back at a future time, we can do that. Otherwise, you would see this letter again next year, and hopefully some of those items would drop off, and possibly there'll be some new items.
Can we see the items year over year, though? In other words, so they don't drop off and say they were actually corrected?
You want us to do that for next year?
It sounds like, because, sorry, my memory's wonderful, but it would be nice to see, here. You know, here's your scorecard
Yeah.
year over year.
Yeah, we can,
And
we
these
can
recommendations
put
were all
something
cleaned
together
up.
for that.
Yeah, I think it would be helpful. Sorry, more work. Thank you, Julie.
Paul, did you have anything else to add? Otherwise, I have one other thing I just want to go through as part of this presentation.
No, that was it. You know, I mean, it's a lot of work into it, and we really appreciate your staff, and I know that audits can be painful with a lot of requests, and it seems like there's always changes, but really you guys have a good staff, and they're working hard to make sure the county has kind of the best financial reporting. So, and I don't say that lightly.
Paul, could you put that, sorry, I'm not logged into the Zoom meeting. Could you put the ACRA back up for me?
Yeah.
So one of the pieces that we need to do annually per state statute is actually review the library district and how that ended up for the year. So I'm going to just tack that on to this presentation. And that's going to be kind of how we'll be handling that going forward to making sure we're doing that. And so luckily for us, the library district is a discretely presented component unit. And so it has its own lovely little column on all of our financial statements, so you can easily see it. So the last column on these two charts, which are pages C1 and C2, I think, if they haven't changed.
Yeah, not changed.
Okay, thank you. I show how the library did for the year. So the first page is the statement of net positions, which has the assets, liabilities, and net position at end of year. And you can see that the unrestricted balance for the, unrestricted net position for the library fund at the end of the year is about $7 million. And then if we go over to C2, this is going to be your kind of your revenues and expenditures, your profit and loss, whatever you want to call it. But This is this is a kind of a tricky chart to read for people who are not in an ACRA very often. You kind of go across and then you go down. And so across where Paul is highlighting are your expenses for the year. So we had about 6.6 million of expenses. And then you have some of your revenues. So we have our charges for services, which are only 14,000, and then operating grants and contributions of about 427,000. And then is there any, sorry, I can't see it in the one I'm looking at, just a second. There it is. Okay. Down the right-hand far side there, we have our general revenues. And so those are our property taxes, the specific ownership tax, and investment earnings. And so that gets us to kind of how the library did for the year, and the change in net position is a loss of $133,000. So we dipped a little bit into fund balance for the year. Any questions on that bit? Thanks, Paul.
Thank you for covering the library. Any districts appear in this or no districts at all?
We do have all of the districts that are part of our financials. So things like the ambulance district and the grids, the general road improvement districts, do all show up. They're considered. I just want to make sure Yep, they're all minor. I just had to go through the list in my head. They're all considered minor, and so they are all reported in the special revenue funds section.
I'm not seeing, for example, all of our friends in Eagle, so I don't see Crown, I don't see.
So it's only the ones that are our districts that are the ones that we have financial.
Taxpayer paying into Eagle, it doesn't show up in our financials.
Correct. So they would show up on Eagles or
So we're
on their
collecting it,
district
We're
finals.
collecting it, and distributing it, and it's just a pass through.
Correct.
Okay.
Yep. That's a good question. So yeah, so those districts.
Town of, Basalt Library.
Yes, all of them, either they are part of another entity's finance ACFR, like Eagle County, or else they have their own district and they do their own financial statements. So it's only the ones that we kind of materially manage, I guess is kind of how I would describe it. Us, Pitkin County.
Thank you.
So, yeah. Any other questions?
Paul, thank you. Enjoy the pool in Carbondale.
It looks nice.
I have a question.
Oh, we got a question for you.
Well, I don't know who to ask it to or who will answer it. It's very specific. It's about the parks, the Park Dedication Fund.
Mm-hmm.
It looks like it's at a negative of $22,080. I thought we were trying to zero that fund out and close it.
Yes, it should be. I'll have to take
But
a look at that.
yeah, because maybe I'm just reading the thing wrong, but it's in parentheses, the 22,000, which tells me it's negative, right?
Yeah, let me take a
Okay.
look at that
Yeah,
one, but
just to
yes,
get
it
back.
should be
I
at
just
zero.
wanted to flag it.
Thank you.
Thank you.
Yep.
I think I can answer that though, if you want.
Oh yeah, if you can speak to it, that's great.
It's right here. So that fund did close down right here. This is the actual column. I think the budget was maybe prepared after, and so the negative here is really just saying the budget ended with 22,000. The actual is 0. So that fund is, zero as of 12/31/25.
So where did the 22,000 go?
So it's just a variance between budget and actual.
Okay, because I know we had one-time allotment, we thought
If you-
close that, and
Yeah, if you look at the column.
Initially, you had thought there would be 22,000 of investment earnings allocated to
Okay.
that fund. And it didn't
projected.
get allocated because you decided to close it down. So that 22,000 would be in interest earnings on another fund, and your ending balance is 0.
okay, so that account is 0.
Actually, some of the funds in that
Correct.
account actually went to the Carbondale pool, right?
That's why
It did,
we were trying to
yes.
zero it out with the Historic Society park around their building in Redstone. Thank
It
you.
is zeroed out though.
Great,
Thank you, Paul.
thank you.
I just didn't have it in front of me.
Thanks.
Further questions? Wrap-up comments? Seeing
It's
none.
a lot of work.
Seeing none. Awesome. Thank you.
you. And we will be back tomorrow with an informal resolution for you
And
all.
we'll see you in about 9 minutes for your next presentation.
Woohoo.
All right.
Thank you, Paul.
Thanks,
Thank
guys.
you, Paul.
Take care.
Thank you, guys.
Beautiful
Bye.
earrings.
I know, aren't they pretty? They have little, like, Indian,
You gonna stay right where you are?
Oh, that's right, I am.
Yeah, please.
you don't get to go anywhere, sorry.
I'm here.
And Grassroots, we apologize, we're 10 minutes early, but we're ready for a Healthy Community Fund.
Oh, thank you.
Hi. Hi.
Ellie, Jordana, Ashley, thank you for joining us.
Thanks for having us. Thank you.
Tell the rest of my family. I'm the only one in that still have family left.
Good? Okay.
Everyone's
I did a runner to juice bar, which was my go-to.
I don't even know what
I saw you cycle out.
I know what they do.
Yeah, I've been walking over to Heron Park, which is beautiful.
Suits,
Stunning.
it seems important.
Yeah.
I never understood it. Once I got out here, like, I'm not going back.
Floor's all yours.
Okay, thank you. Good afternoon. We're here for another round of Healthy Community Fund renewal discussion. This is our second work session in the last 2 months, and we are hoping that after today, we'll be back to you with actual ballot language on a resolution. So we're hoping to wrap up all the last little details of the ballot today, so the next time you see us, we'll be at a regular meeting. Us is myself, I'm Ashley Perl, the Resiliency and Housing Director for Pitkin County. Liz Woods has a very long title, so she's gonna do it.
Liz Woods, Finance Director, Treasurer, and Public Trustee.
Jordana Sabella, Director of Public Health. Kelly Medina, Interim Director for Human Services.
Awesome, and Kara's gonna jump in as needed. So, we were with you in May, and we said there's really 3 big questions, and we talked about these in the retreat as well that you all had earlier than that. 3 big questions was, what is the amount of the tax? What about a sunset? How long would you like the tax to run for? And then what's the structure of the tax? Last time, we talked with you a lot about the structure of the tax, and you all gave us direction, or really discussed wanting to move towards a fixed mill structure, different than a fixed amount. So you'll see that in the draft ballot language that we'll review today. We talked last time about a sunset as well. We'd like to revisit that conversation just to double check that we've thought through all the different considerations. And then today's focus will really be on the amount of the tax. We didn't really get there during our last work session. So that's kind of our timeline agenda for today. As a reminder, we're talking about the Healthy Community Fund, which the mission is to help Pitkin County residents and employees be independent, healthy, and safe. It's a voter-approved property tax fund that expires at the end of 2027. It's designed to support both county-operated services as well as nonprofit organizations doing extension work that the county would otherwise do or support. The fund throughout its many years has kind of fluctuated between sometimes supporting more county-operated services, sometimes supporting more nonprofits, sometimes being right in the middle. So to have that flexibility to respond to community need is really great. And we really see this as after, I forget how many years we're at, 20 plus years of the fund?
2002, I think, right?
Great, you're the math
2004?
person.
Oh, okay. I was like,
So
I think we're
24 years of the fund, you all know, this is such a backbone fund for the community. It's not something new, it's not something flashy, it's not, well, some years we need it, some years we don't. We need it every year, the needs are increasing, and we know that when sometimes the needs of the whole community are big, so like the years that we saw property valuations go up or during COVID, it hits this fund is kind of a bellwether for, or like a meter for what's going on in the community. Because when we see more folks coming to the Healthy Community Fund for support, we really know that it's like telling us what else is happening in the community. You all know the rest of this. We'll move on. In your packet, there was draft ballot language. We've been working with the legal counsel since 5 minutes ago, so it has changed. So I wanted to call out what's changed since what was in your packet. The biggest thing that was changed is the one that was in your packet did not have a sunset period in it. So we've added a sunset period that says no more than 20 years. So we will talk about that in a second. The other thing that changed is in your packet, the protection of quality of our natural resources was combined with supporting survivors of domestic violence. We made those 2 bullets.
2 bullet points, thank
Yeah,
you.
they're not really the same thing. And then the things that are highlighted are really what we want to discuss today. So just so you know what you're looking at here, this would be a draft ballot question that the board can edit, and then we'll officially bring to you via resolution in a regular meeting to put on the ballot. The bullet points are exactly the same as the ballot language that ran in 2018. So we haven't touched the bullets. We can continue to discuss those. We've received general direction from the board that you're not that interested in changing those. We can make slight tweaks, bring them up to kind of more modernized language. We can combine some bullet points, but we haven't heard from you all that you want to do a wholesale change of any of those. So those are exactly the same as in 2018. The legal language at the bottom does things that Liz can tell you about in a minute. And then the top part, there's 3 things highlighted. So the bright pink is what we'll discuss today, which is what is the amount and how does that correspond to a mill levy? And then the lighter pink is language that we've asked the legal counsel, is it possible to actually start the question that way? So it could read, to continue funding the Healthy Community Fund. So legal's looking into that. We unfortunately don't have an answer today, but if the answer is yes, we think that would be a stronger question. But in the meantime, that's kind of how it's reading. So
I'm glad you're doing that, because when I read it in the packet, I was like, oh, really? Another new tax? Nobody's gonna read any further? So that was a good question to ask. I hope we can do something like that.
I hope so. I haven't heard back from the attorneys yet.
Yeah, I'm guessing that it will be allowed, but we'll have to make sure. We always have to follow the lovely Tabor laws, and since this is a Tabor question, we have to be extra careful.
Liz, will you speak to the bottom part and just
Yeah.
the Tabor pieces?
Yeah, so the bottom part really goes into removing restrictions from this pot of money, and so currently the general fund, for instance, is under 3 separate restrictions. We are under Tabor, which is the Taxpayer Bill of Rights. We are under our Home Rule Charter restriction, and we are under what's called a statutory restriction, which caps things at 5.5%. So we are basically kind of removing all 3 of those restrictions from this property tax, which is what we've done, for instance, with the open space and trails property tax, the housing property tax, the translator property tax. We've done it with a lot of the kind of special interest property taxes that we've done over the years. And it allows more flexibility by doing that.
I just saw another edit that needs to be made, which is care for the terminally ill and their families needs to live on a separate line. It has a bullet in front of it, but the formatting's just a little wonky.
In our new draft, it does have that, so we're good.
Perfect, great. So you all will get another look at the actual language once we get feedback from you all. So we don't need to necessarily get into editing this today, but we can certainly talk about whatever you want. We wanted to kind of use this to frame up today's conversation, which really is around the 2 bright pink parts, which is what is the amount that you actually want to put in there and what is the mill that you actually want to collect. So if you want to talk about this, we're welcome to, or we can just use it to frame and kind of move on.
I think I had Patti first.
Yeah,
and then Francie.
I do have a concern about the bullet points. In reading the original mission statement and the creation of this fund, there was no mention of cultural or environmental. We wrote that in the last time we had this reapproved because we were looking at funding those organizations, and so we added that, but we didn't really change the mission. The mission is pretty much, about safety and community health and those kind of issues, not the environment. And I think it's just open for further discussion, because I think we found that people are not just applying for the Healthy Community Fund for environmental causes, but they're also going to the ski company, Environmental Foundation, they're going to Healthy Rivers and Streams, and they're getting funds from other areas where the food bank can't really go to Healthy Rivers and Streams and say, can we catch trout and eat them? That kind of stuff. But, so I think that's for further discussion. I don't know if we want to have it before we finalize the language, or we either need to change the bullet points to not include that, or we need to change the mission statement of this to include it.
You talking about the second point?
I'm talking about the fact we have protection of the quality of our natural resources, and it's also over here under cultural treasures and environmental quality. But if you look at why we created the fund, it doesn't mention those things. It just mentions public health, senior service. It's Pitkin County resident to be independent, healthy, and safe, supporting public health and human services agencies. It doesn't say anything about cultural or environmental. So we either need to change that, the mission statement for the Healthy Community Fund, to add it, or take it out of a bullet point, because to me, we added it so we could start funding environmental issues, and now we're finding that, and I don't necessarily have a problem with that, except they're also going to to Healthy Rivers and Streams and getting money, to the Aspen Environmental Foundation and getting money, and it's not really double dipping, but it is. And I think our concern, at least for the next few years, is health, is public health, is food on people's tables. This is my mantra, and that's a priority, and we only have a limited amount of dollars, and we're spreading it really thin. So I don't know when we want to have that discussion, but I would like to have it.
And maybe just a clarification, and I think Liz can help me out. So what is listed here in the ballot language is not changed, at least from the last one. I believe even a couple we can double check. But Patti, I think you're referring to, there's what we've put in the ballot language, and then there's what we've put in the accompanying resolution, which calls out the environmental and cultural. So there's kind of two different ways that you all can look at what is in the ballot language to create that opportunity, and then using that resolution as further defining or putting scope around those pieces of it. So I think there's...
And how do we stop people from coming to us for environmental funding and then going to three other, because I don't think the Healthy Community Fund Committee looks at that. Where did you get money from the Environmental Foundation at the ski company? Did you get money from Healthy Rivers and Streams? And I think it's great that they can, but our monies for the Healthy Community Fund are very limited and getting stretched too thin. So however we want to address it, I just think we need to have the discussion. Or I would like us to have the discussion.
I don't see a problem with their going to more than one organization. That sounds like savvy fundraising to me. And like Aspen Ski Co. giving them money is completely unrelated to the county giving them money.
I don't disagree, but we only have a limited amount of money to put food on people's table and to cover the Medicare gaps, Medicaid gaps.
Yeah, no, I got you. I get your point. But I also think that environmental issues are related to public health. But we could have a discussion.
Yeah, when I'm talking a few dollars going a lot of ways, we have to prioritize.
Yeah, okay.
I
do have a question though, if I could.
Francie.
Do you want to finish this conversation first?
I think, well, let's table it for 1 minute. We're going to go to your question, and then we're going to come back. I know they want to focus on the
Yeah,
pink.
we can
Yeah.
have
Yeah.
this
Yeah.
discussion at the next time. I just want to bring
So,
it
the red pinks, if we choose one, that determines the other, right?
Correct.
They're not independent.
No.
Okay, it's one decision.
Good
Correct, yes.
Okay, just checking. Yeah.
And I've got one timing question. So neither the library nor Crown Mountain, for example, have sunsets. Why does the county continue to come back with ballot language that does not have sunsets? So we've got, in other words, we've got districts within Pitkin County property taxes that are continuing to not sunset. And if this is so integral to the way of life in Pitkin, why are we negating or passing on an opportunity for this board just to say there's no sunset?
I think that's the opportunity before you right now.
Yeah, we're not.
Okay.
We're sunsetting it within 20 years.
That's
So
something.
We talked about that, but we
Yeah.
haven't made the final decision, correct?
So the next section is to go into the sunset. We can go there. I know you all were.
You want
tabling
to do
a
the
couple-
pinks first? This is,
No,
we've got to go black and whites?
We're gonna talk, our plan was to talk sunset and then to talk about the amount.
Okay.
Just on the sunset, like this is, we're doing this because it is sunsetting.
Yeah.
And we're taking the opportunity to potentially grow the program. So that's, it's not always, a sunset isn't always to take it away. It's to revisit and see if it needs to be adjusted for what lies ahead, and that can be expanding it in a way. So I don't mind the sunset myself.
That's a good point.
The other reason why we've had a sunset is to get the ballot question passed.
And
That's
the
a
real
really good
reason.
point.
That may be the real reason.
Yeah, so maybe I can jump in and kind of talk a little bit more sunset. So at the last conversation we had, the board wanted to look at the 20-year, but also look at it compared to the other taxes that are out there. I think most importantly, and I think all of you are hitting, we all know that Healthy Community Fund is integral, and so there's definitely clear direction. Whether no sunset or sunset, let's make it a longer time frame. The longest that we've had is this current one, which has been 9 years. 9. And so we're talking real progress here. So staff looked at this, and we've showed you this. You can go to the next slide. So again, we only have 3 that have a sunset in the county. So to your question, housing, open space, and Healthy Community Fund.
She's got everybody nervous. Every time she comes out, we all go.
I know.
My red light's on.
So Jeffrey, to your point, actually, most of the county does not have a sunset. There's 3 that we have. The board has been intentional in their reevaluation or putting the question about the sunset, about having a sunset. So we looked at, based on the past board discussion, we looked at how does that relate compared to the other ballot questions, but then thank goodness for Connie, who knows all things. She brought out the really important point. When we went last time in 2018, so most of our programs and grants within the Healthy Community Fund are actually 3-year grants. So not necessarily the community nonprofits, but as you all see, most of the time we're doing it in 3-year award tranches. And so it was actually the decision of the board when we renewed in 2018 to do it in a kind of an increment so that we weren't cutting people off at 2 years or something like that. So 20 years, then the recommendation using that would put us probably at 21, which I think is probably too close to the affordable and workforce housing renewal. So options, what staff is out proposing is rather than a 20-year, you could actually go to 30 years. But you could talk 27 or 30, but 30 years would give us still that opportunity for 3-year. It also gives us a little bit more flexibility to potentially, for some of the programs for our health and human service partners, maybe we want to look at 5-year increments. So it just gives flexibility as the board considers a 21 or 30-year kind of sunset number.
We have to decide how long the increments are going to be.
You don't need
also?
No, you don't need to decide. I'm just putting it out there as a consideration. It creates flexibility, but that has been some of the
reasoning.
Thank you. Couldn't say that word, reasoning.
Yeah. Okay, I get that.
I think that I like your recommendation. We've demonstrated over the last 2 or 3 renewals of this fund as it extended that this is worthwhile. I don't think anybody in the community wants to sunset it. So if we think that we can write it so it's inclusive enough and comprehensive enough to be able to go 30 years out and still be relevant, then why not? And I appreciate actually having a sunset, because a time will come when things, perhaps it really does need to be sunsetted or tweaked enough, and that's a great reminder. So what I'm saying is I'm very comfortable with your recommendation that we go to 30 years, and I think it's an easy explanation to the community to do that. So I think we have evidence that it's a worthwhile program and it's been well managed so far. Let's take it to 30 years.
And plus 30 is a multiple of 3 and 5, so.
So there you have it.
We don't have to
see?
make that decision.
Exactly. That's a logical conclusion there. And
Mathematician
so
speaks.
I want 31. I want a prime number.
Okay, well, fine. It won't matter to me at that point. Anyway, I think this isn't something to spend a lot of time arguing over.
So-
I think it's just,
Do we have board consensus around 30?
I'm fine with 30.
Yes.
I'm okay with 30.
Can we go back up to your pink slide? So we've done time. Is there any reason why the text that says to continue funding the Healthy Community Fund after the current proposed tax expires in 2027 doesn't come first?
That's what we were just talking about.
We have asked
No,
legal.
but can we move it so it's actually,
Yeah.
We've asked legal counsel, we have outside legal counsel that drafted this ballot language
Yeah.
for us, and we asked them today if we could move it, and we're waiting on a response. If the answer is yes, it sounds like that's.
We will
the
move
direction
it
we'd
if
like to
legal
go.
counsel says it's legal
Okay.
to do so.
Well,
it's still going to be Tabor-ish and all caps and all the other bells and whistles of a tax?
Right.
Okay.
So,
I think, sorry, I'm just gonna
go ahead.
tack on to that,
Yeah.
is this is kind of bringing up, but I believe that there is very specific way you have to start Tabor questions. So
that's-
that's why we have to just be very careful with the legal aspect of this. So I'm pretty sure that we have to do that amount first.
Right.
But we might be able to move it slightly higher in the question. So that's what we're working with that council on.
And refresh the board. All caps means it's a tax?
It means it's a Tabor question.
Cool, thank you.
And then it has to be approved here, and then it has to be
I
approved by the
knew
state
Tabor and
anyway.
Trump were related.
So if we don't do it right, they'll kick it back to us to redo before we submit it again.
Greg, please.
So the language that is allowable in Tabor, I'm told, is you can actually begin a sentence without raising increase, without increasing taxes. There's something that's approved to say, without increasing taxes, blah, blah, blah. But in this case, we cannot shoehorn a renewal of the Healthy Community Fund in any way into that category.
We don't
could-
know yet. We're
well,
asked legal
That's
counsel.
We've
the
been
legal
told
question, but I think
that-
it's been answered.
Yeah, we've been told that even if we keep the collection amount the same, since we're moving to a fixed mill levy as opposed to a fixed amount, this is considered a new tax. So we cannot say without increasing taxes. The best they could do was the language you see there, which is, continuing the funding the Healthy Community Fund, to kind of explain to the reader.
Oh, so that may be a question. Is
So
it a
the
renewal, but it's
only-
really not a renewal because it's a different format?
Right.
So the only, I want to be clear for the board and for the public, the only way it would say without increasing taxes is if we stuck with the fixed rate amount, or the fixed rate collection process.
And we've already seen how that amount is declining relative to the cost of doing
Yeah.
business. So that's not
Cool.
an option.
So decision made.
I think Ted had a question, sorry.
No, that was answered. It was about even if we don't raise, but we just change.
So we need to know how much we want to raise.
Shall we
Well,
talk
there
about
was
it?
a discussion on like if it's going to say
You're
if it's
prompted.
going to say that, then you could add to it because you're already saying we already have the language that's implying there's a tax increase. I mean, our aversion to adding anything to it, I'm in support of keeping it the same, but there is an argument to be made where you already have the language implying there's an increase. So is it a lost opportunity to
Increase the
ask for
tax.
an increase? I don't need to do that, but it's something to think
Well,
about.
technically, we're asking for a different form of taxation,
Yeah, exactly.
which
Okay.
may
So-
or may not result in an increase depending upon property valuations.
Yeah.
So we'll jump into this. So at the last board meeting, I think there was interest, but we got clear direction on moving to a fixed mill, looking at a sunset, that we want to make sure that we have stability of the fund. I think there was a lot of questions and interest, but kind of different trade-offs as we look at what kind of increase or rate you want to put on the renewal question. As Ted said, there's a couple different ways you can look at this trade-off. One is because we're moving to a new tax and it will read as a Tabor, is it an opportunity to look at a moderate increase, or is it added risk to the renewal? I think that's some of what Ashley and the team will walk through, kind of how we've considered and looked at what an increase would be able to provide as you think about that for the community.
Okay, so this is just a reminder of the prior renewals, passage and renewals.
And so you can see that all of them have been just renewed for inflation, except for in 2019, when we added $750,000 for the public health department specifically. Next slide, please. Greg, you had a question about the number of people affected by this funding. Well, we couldn't come up with a great estimate of that. We could just share the number of agencies and organizations funded above 70. Most recently, as you can see, it started in its inception with only 9 agencies. So I think that the impact that this fund has, it touches a lot of folks who live, work, and play up in Pitkin. So now we come back to the community needs and funding pressures. So as has been discussed before, we know that all of these pressures are increasing. As far back as the pandemic, those really brought into sharp relief that existing social services and health services were not sufficient. Ongoing inflation, rising housing costs, and current reductions or instability in both federal and state funding continue to strain households as well as our service providers, nonprofit partners. As a result, demand for our core human services and public health programs, we estimate it may increase 10 to 40%. We have seen off-cycle funding requests already emerging due to those loss in federal funding resources. And so in 2025, there was $150,000 of off-cycle requests.
Jordana, will you explain what we mean by off-cycle requests?
I can't hear you, Ashley.
Oh, really?
That's
I'm
better.
getting so much echo. I was going to ask Jordana to explain what we mean by off-cycle requests.
So Healthy Community Fund dollars come normally, applications are due in
A couple of weeks.
in a couple of weeks, and then a committee reviews them, and then they're awarded for the fiscal year of January through December. If folks are having needs above and beyond what they were awarded, that would be an off-cycle request where they're able to come back, and if there's fund balance, apply for that.
Mm-hmm. I'll add, we just drafted an impact statement, and we collected the data of how many estimated individuals have been impacted by Healthy Community Fund from Aspen to Parachute throughout the various nonprofit partners, and it's 55,000 so far to date.
55,000.
From Aspen
have
to
been
Parachute
impacted
of
by the
individuals who have been impacted by the program.
From here to
Well,
Parachute.
we did have a number for you
I
guys.
thought that was everybody from your parachute. I thought that was the
surprised
total
it's that low.
population.
Popular program.
That's nanoparticles.
So kind of elaborating on what we were talking about the benefits of the possible revenue increase, it's again, being able to respond to the local emergent needs that we're seeing, not only because of the state and federal conversations that we're having, but also because of the increased need with food insecurity, behavior and physical health, especially like our federal qualified health centers like Mountain Family and Community Health Services. So giving us that ability to be nimble and responsive, so that we can make sure that our nonprofit partners have the ability to support us and give us some relief too, because if it wasn't for them, it would probably fall on our human services team. But it also just shows that, you know, this fund really is able to adapt and respond when needed.
Do you want to cover any other points?
Well, please cover the last one a little more thoroughly. I think that's really important.
I will look at Liz.
Yes, I can speak to that one. So regardless of what mill levy we put in place, the BOCC reviews all mill levies every single year as part of the budget process. And so we could do temporary tax credits in any year that we do not need as much services for the Healthy Community Fund. And so we could, you know, scale back that amount in years if we do start to see more federal funding things in a new cycle with a different, president or other things going on. So, so those options allow for that flexibility still in the future.
And we have done that.
We have a
It's kind
track record
in
of
your
doing that.
dreams possibility
No, we've done it.
We've done it.
for the older people last year, but.
No, we have done temporary credits for open space and trails when we had the big property tax increase a couple years ago. We've also done property tax credits for the ambulance district several years. We had a 10-year plan for the property tax, and we've stuck pretty closely to that. There have been a few things that have happened where we've needed longer lead times on ambulances, where we had to adjust in certain years, but we have done property tax temporary credits for that as well.
This is a little different, though. I mean, you know what I mean? This is like, well, for instance, the pie chart that you showed about who gets the money, where does the money go, and how much of it is distributed to Health and Human Services and this and that. Is that flexible or is that set? Because there's always going to be nonprofits who want more money. They're never going to say, oh, that's okay. We don't need any more. So I see this as a little bit different than the ambulance service or, what CMC did, or even Open Space and Trails, for instance, because we have people who are going to fill in the need with their organization's requests. It seems to me, it's just the way I see it, but, I mean, it doesn't mean it wouldn't ever happen, but it doesn't seem likely.
So, Francie, to your question, the percentages, which I don't know if we have in this, the percentages are set by the board on staff. And so right now the recommendation is to not change those percentages. So I think it's the 45, but I can't remember what they are. So right now the recommendation is to keep those percentages as is. And then both staff and the Citizens Grant Review Committee is evaluating based on those percentages and kind of the resolution, which is what Patti was referencing too, that set out the goals within each of those. And so that's how the funding is distributed based on those percentages. That does not mean if we don't want to change it year by year, but if we are looking at a 30-year time period, it doesn't mean that there's not a time when maybe we need to reevaluate that percentage.
Well, the reason I asked that is if we have a year where we feel like we have extra, could we then distribute more to the nonprofits? That's why I asked that.
There's a provision, and I'm not going to get it off the top of my head. There is a provision that says subject to, health and human service as top priority needs. So we kind of put that condition, like we looked at it last year, if we needed it if we needed to basically empty out the grant review, the community nonprofit, because we had extreme need in health and human services. So that provision stays in as kind of a backstop piece of it. It doesn't mean like, we could talk about if the board was interested in, if there was additional increases to nonprofits, because we've met all the other needs.
Well, we keep an emergency fund.
Yeah.
On the side, so if something comes up mid-year, like food needs, we have that as a backup, or a
What
pandemic.
is that fund called?
What's that?
Discretionary fund.
No, it's called something else now.
Stabilization.
Stabilization?
That's a little different. Within the Healthy Community Fund.
This is not our money,
Yeah,
this is the Healthy Community Fund.
Within the
dollar.
Healthy Community Fund, we had we carry over fund balance as well. And so last year, I think last year we were able to do some of those off-cycle requests through the fund balance to those needs. So sticking
Did we
just
fund the
within health.
CSA with that, Betty?
No, that has come through.
No, not last year or this year?
No, that's been from savings of human services.
And I will add that we do plan, like after this has kind of been finalized and after it's gone to the voters, we could come back and talk through what we want to do with the fund balance policy, which would be kind of separate because we're going to be in a different place with this property tax being a fixed mill. We can kind of set a fund balance policy of like, we want to have this much reserve in this fund, but we also want to, have this flexibility for emergent needs or something like that. So we'll come back to the board to discuss that at a later date.
Good idea.
And just to kind of wrap up this conversation here, and I know we have more to share, the ballot language is what you saw. There's no percentages in there. What we've been talking about that Kara was talking about would be a resolution that would lay out the percentages, that could lay out some other things. And then what Liz is talking about is a policy. That would be even separate. That resolution, since we're potentially talking 30 years, you could review that periodically, and we could even add something in the resolution that would be looked at. This has been such a short-term fund for its entire life. 4 years, 7 years, 9 years has been the longest. By the time we get it going, it's already time to renew it. So we haven't had a ton of check-ins. I would imagine with a 30-year structure, we would have a lot more reviews and understanding of the different trends and changes we're seeing built into that. So the resolution is editable by the board. The ballot language would not be unless you
I
go
just
back to
said
the
edible.
voters. It's edible. You can eat it.
Well,
Yeah.
good thing we're funding food services in here and human
Next
health,
slide.
the senior lunch program.
So to give some dollar amounts to what additional funds could potentially support, and some of the changes that we're seeing right now, we reached out to Mountain Family Health Centers, our federally qualified health center, and HR1. And some federal Medicaid changes are expected to reduce the revenue for safety net providers such as Mountain Family. They're expecting a $1.6 million loss in revenue for their entire organization in 2027. And extrapolating what that impact is to the BOCC clinic, which is the clinic we mainly fund, that's about $256,000 on an annual basis of loss that they'll be looking to backfill. Additional things to think about in the future are some of the sustainability efforts. We've gone and received a number of different grants for some of the strategies laid out in the Behavioral Health Strategic Plan, and some of our other programs that we provide around behavioral health. We are currently receiving a grant for a community navigator position, which was one of the strategies named in our behavioral health plan. It pays just over $100,000 for a person in a position to work out for a community nonprofit to do this work. We know that when that grant expires, there'll be some continuity to look for, if that position is doing what we expect it to do, where is this continued funding for that grant demonstration project going to be coming from? And then Kelly, do you want to talk food access?
Yeah. So this one was a bit tricky to get data on. There's a lot of regional assessments. The team did a phenomenal job in trying to compile all of that data. Based on those regional assessments through various partners, there is approximately $730,000 in funding that's needed for regional food security efforts. Back in August of 2025, I believe the previous Human Services Director did a presentation of an estimate of $550,000 at that time. So that's just showing an increase from 2025 to now of where our food access is. And that's not just one nonprofit, that's within the region from Aspen to Parachute. And so again, this is just a rough estimate, and I think the gap with food access is there's a lot of nonprofit partners in our human services team who do a lot of great work when it comes to addressing it, but there's not like a solidified or codified strategic plan to actually like assess what the true cost is. So this is just like a rough estimate of what that could look like.
And then while we're talking numbers, I will also just remind you that the general fund in this year is slated to contribute $2.1 million to human services and $1 million to public health. And that is in addition to the contributions from the Healthy Community Fund.
What do you mean, we're slated to contribute that?
Sorry, no.
Budgeted.
Budgeted.
I'm like, did we already, that's for 26?
Actually, I misspoke. Sorry, that is for 2025. That is how
Okay.
much the general fund contributed
Okay.
to both human services and public health.
Do we contribute anything from the budget for 26?
We do that annually, where we have to subsidize human services and public health annually
So
from the
this may
general
help
fund.
to reduce this coming from our general fund?
That is one of the discussion items.
That would make me very happy. Thank you.
So we started with, you've seen this information before, we just wanted to put it up again. This kind of shows what these different options look like. So we have kind of that base option, which is just no increase and kind of continuing as is. And so that is currently the cost per 100,000 of assessed value is $76.90. And then it shows each of those kind of increments. And we can go somewhere in between these increments too. This is just kind of giving an idea of scale of money. So we have the $250,000 additional, $250,000, $500,000 and $750,000 increase. And what those would look like on, like, for instance, a property tax bill for each of those additions.
And that's on assessed value, not,
Oh, could you go back for just a second?
Yes.
what are they paying now per $1 million of assessed value?
It's that 76.90.
So
Oh,
it's
okay.
like $38.
Oh, sorry, that's on the
difference.
100,000 of assessed value. So it'd be on a $1 million, it'd be the 769.
But these total revenues are projected, because we don't really know what things are going to assess at, right?
So we will set the mill with what we project where things will kind of
Okay,
land.
yeah.
Yes, so this is definitely all estimates, and, you know, we are just doing our best to kind of
Right,
put,
just
yes.
making sure,
Yeah.
because there is the possibility too of choosing a set amount, right? Which would then have to have a fluctuating mill levy depending on the assessments, is that correct?
Correct. So if we were to go back to the fixed amount, which is what it is now, then it basically, the mill kind of gets set to whatever is needed to keep that amount the exact
And
same.
so we are choosing now between a set mill levy or a set amount, is that correct? Is that what we're choosing?
No, I'm going to just clarify that previously when we spoke with the board, the
Fixed
direction
mill.
that we got from you all was that we wanted to look at the fixed mill. And so I don't think we're revisiting that unless the board wants to. What we're talking about now is if we want to just kind of continue the property tax with, you know, if we were here this year, we're just kind of just doing that normal increase that we would normally do next year. Or do we want to put just a little bit more of a bump this year, the year that this goes into effect, and allow us to be able to cover some of these additional growing needs that are happening in the
Okay,
community?
and what did we suggest for the fixed mill? What was the mill that we were talking about? that would
It
be
is
fixed?
0.769 if we stay at that base amount.
And then adding,
Oh, it's up there.
So,
sorry.
yeah.
I'm sorry, I thought I understood this, but when you tell me that, it makes me feel like I don't understand it. So, I thought we were trying to get an increase, so why would we fix a mill levy at where we are now?
Because if we set the fixed mill levy and we remove the restrictions that we talked about in that bottom part of the ballot language, it allows for more growth with assessed values as it goes up. Whereas if we go with just the fixed value,
Oh, I see.
we're
Okay,
stuck
I
at
got it.
basically inflation.
I remember now, thank you.
Yep. And so actually the mill levies are on this screen of like what would the mill would be for these different growth or these different additions that we're talking about.
So my question is, why would we not want to go with the .897, which the difference cost per 100K of assessed value is like a $13 or something, $12. I mean,
That
Yeah.
is the board's discretion.
I
Well,
mean,
I mean, if per million though, it's $130 per million. So if
Per
you have a
assessed value.
$30 million property, you're talking more. You're talking, $3,000.
if you have a $30
difference.
million property, I think you might be able to pay for human health services.
Doesn't mean they're not gonna complain.
So, and the business question is, the ship's already left. Since we're going fixed mill, the language that voters are gonna be hit with is, this is an increase. So whether we choose to stay the same there's no benefit, if you will, from a campaign standpoint, because the language is gonna be set based on our previous actions.
I would say that that's a fair assessment, yes.
So you know, I would vote for the 500 or the 750 in terms of the increase, given the language that's being presented through the Tabor-generated ballot.
Right, especially with the fact that if we don't need that
Cost.
additional, we have the opportunity to do a temporary tax credit. So, and we have proven that we stand by our word on that. We didn't need the money in open space a few years ago, we did that. We didn't need the money in the ambulance district, we did that. We do that.
It's also the year that we're going to feel the impacts from HR 1, so it's hopefully politically the right time to say, hey, you know, this is now your local government standing up to the impacts of, I'm trying to come
And the
up with-
effects of not being able
Loss
to
of
fund
federal
healthcare for
funding.
people is gonna hit our local hospitals, huge.
But if assessments go up, we're increasing it doubly. We are, if we go to the 0.9897. We're increasing the mill levy,
and then
and so
valuations
that
went
would
up as
increase
well.
your taxes. But then also if you get reassessed at a higher value, which of course you will, that will also increase your taxes. So it's like a double whammy,
Except if you get assessed at a lower value, you're paying less.
which hasn't happened since
It's
2009.
coming down.
So I will say that the last reassessment cycle was basically flat. So, you know, it is definitely not growing like it did during COVID, for instance. I don't think, you know, this is totally take it or leave it, but, you know, right now the market has definitely slowed, so I do not see a big growth cycle
see it
on the
coming
next
down.
on the next reassessment cycle. That could change. You know, that can always change. But again, the flexibility of the property tax credit allows you as the board to say, like, well, we actually don't need to take all of this, you know, this double dipping of kind of what you're talking about. We can give a temporary property tax credit because, you know, maybe there is not quite as much need at this one point in time.
Now, and I think I said this the last time we met, that this is one of the ways we have of making a slight dent in the disparity in our wealth in our community is to do something like go to 0.897 and have people with really expensive pieces of property contribute more to the welfare of everybody in the county. So I'm with you on going up in the mill levy.
And it ensures viability of our hospital in the long run if we are able then to benefit people who are in need of health care
Ted?
with public health, et cetera.
I think it's a good discussion. Just to counter, just for the sake of talking about it, the campaign will precede anyone seeing the ballot language by a lot, months of time of being able to say, this is what we're doing, before anyone really gets their ballot, seeing shell taxes be increased in all caps. We will be able, I mean, you can look it up if you want, but most people don't see the ballot language until
But when you go campaigning, they're gonna ask to see a draft ballot language.
they will, okay, but I mean, I think you can say we're actually, if, just to argue against the increase, and I'm not making a decision here, but you would be able to say, we're just switching it from fixed revenue to fixed mill without an increase. You know, the ballot language will imply that there is an increase, but we could be going to voters saying there isn't actually an increase if we feel like it's a risky time to ask for more.
You can't go out and campaign and say it's not gonna be an increase, then have the ballot language have an increase.
Well, I mean, I think if we have a
Can't do
campaign
that.
for, you know, yes on whatever this ballot initiative number will be, and we talk about it aggressively, people will look at it as like, well, they're just changing it from this to that. And if we keep it at the 4.2, it's just one argument in opposition to making a further ask, because there's a lot of other asks going on. I think it would be good to know at some point in this conversation what else might be on the ballot, what we're competing against, because we're not in a vacuum here. Just something to consider. I like the arguments in support of asking more, since we're already asking. But
Francie?
Yeah, I think that during the campaign, especially when you go door to door and I write something in the paper, that
Francie won't go door to door, just so
you
you
told
know.
me that already. Yeah.
that we can explain. It doesn't even make up for the losses in our previous funding.
Okay.
So I think we can explain that we have endured or suffered from serious state and federal losses in our health and human services departments and the way we serve our people. And this is our small effort to make up for that loss. And I think that helps to account for, or at least helps to balance a little bit, asking them to pay a little bit more.
And Francie, and to add to that, and if in the future federal and state funding is reestablished by the grace of God, if you are religious, then we have the opportunity to do temporary tax credits, which we have a proven track record, yada, yada, yada.
I would feel a little disingenuous saying that, because I can't imagine I would ever approve that, but you're
We've
right,
approved
we
it in
could
the
say it.
past.
We could say it. Yes, but I still think that was.
You and I
different.
won't be here, because by the time that happens,
Yeah, right.
the
By
federal
the time the
dollars come
economy
back, it'll be
recovers.
5 years down the line.
Yeah.
So when you knock on doors, Francie, you can say whatever you want.
Do we know what else is on the ballot as far as asks?
Yeah.
We've been looking.
So, what we do, and everyone still is debating, but what we are aware of is most are looking at sales taxes. Nothing really in the Upper Valley, but BOCC is looking at a sales tax. I can't remember what the amount is. I'm gonna get our FFR, Roaring Fork Fire Rescue, I had to think about that, is looking at a 1.5% sales tax in BOCC and Snowmass. Right now they're not looking at unincorporated Pitkin County, but just within the municipalities. So that would be an additional increase to sales taxes. And then the other property tax, I know the Roaring Fork School District is looking at an override. It's unclear if they are gonna go for any kind of increase on their property taxes.
So the Snowmass branch of the fire district is looking at increasing sales tax. I thought Snowmass was already at its max. They have a really high sales tax.
The max got removed that cap got removed a couple of years ago, which is why you're seeing.
Snowmass, I didn't know you could, I know you could exempt, like we did with the Healthy Rivers and Streams sales tax. That was done legislatively. You could go over and above your cap. I didn't know you could remove your cap.
What is their sales tax in Snowmass?
They're 10%, and roughly speaking, if all of these go through, I believe pretty much it will be over 10% in all of the Roaring Fork Valley of sales tax.
The Midland Shopping Center in Glenwood is 10%.
So
The
that is what
Midland?
we're aware of for.
The Meadows,
The Meadows.
you know why? Because they have
It's
a
on
special
Midland, the
improvement
Meadows. It's
district
10%.
for roads, and they have a special improvement district, which makes it really high.
So most are looking at a sales tax. Again, the only one that I'm aware of as a potential property tax would be Roaring Fork School District, which, again, it's still to be determined if it's simply an override or if there is an override and an override similar to what CMC did last year with the changes in Gallagher, and if there is an increase associated with that or not.
Well, their tax is already high.
We do have the second lowest property tax in the state.
So Snowmass Village sales tax is at 10.4%, and their lodging tax is 12.8% currently.
On top of that.
So it's just that there's an additional lodging tax, basically. So you pay 12.8% on lodging instead of the 10%.
Right.
Yeah.
Aspen's is similar,
Yeah.
right? Yeah.
Can I get buy-in from the board on an increase in the Healthy Community Fund relative to today's, given inflation, healthcare costs, burden to both health and human services? Yeah.
I would propose that this is really dangerous ground, and I think we have to be modest in that. Maybe people consider adding that much more. The max amount here is still as modest, but it's not. And the calls I get from people are usually retirees who've been here forever. They may have a lot of value in their home, but they don't have a way to pay additional taxes, and they call me to tell me about it, and there's a lot of stress involved. I know people who will not vote for that if it looks like we're just trying to go for the maximum proposed here. So I think that this will require some real education and some real work to lobby to get this passed. And I really like to be able to say, we realize this is a valuable fund to the community, thus we want to extend the sunset to 30 years. That's an easy one. We're going to a fixed mill levy, which means it'd be nice to say we're not trying to get more money right now, but we're just trying to tie it to inflation, and we're not trying to increase it dramatically. the problem with all the taxpayers federally is we're not receiving the federal benefits and the state benefits, yet we're still paying taxes out. So it's not like they're not being taxed more by the feds and the state. At least that's my perception of it. So this isn't going to go over particularly well if we say, well, let's just go for the higher number. Yeah, we could use the money. We can always use the money. We need the money. It's arguable, but I'm worried that we're playing really close to the limit, and it's going to take a campaign to convince people that what we're trying to do is maintain what we've been doing, and tying it to removing the depreciation we see in the value with the mill levy. So I'm really hesitant to raise this.
But they won't see the graduated scale, will they, that we've just been looking at? They won't know.
Yeah, but if they ask me about it, I'm going to tell them. You know, I think we're compelled to be truthful and as transparent as possible about what we're trying to do. And if we say, yeah, and we think this may be an opportunity to increase it, I'm afraid we're somewhere. I don't know what the limit is, so I'm nervous about it. I don't want to be. I want to be really careful in doing this. This isn't going to be a new incredible source of income. This is trying to maintain something that exists that's been really essential to the community. And so I'm trying to figure out where I stand here, but increasing it doesn't work for me.
So you're saying no increase at all?
No, I haven't said that, but I don't want to max it out.
Okay, that's different than what you said.
So, but I don't know what adding 250,000 in the first year is going to, what difference that's going to make to Health and Human Services and, all of our funds. It's not going to be enough, clearly. We've already seen asks that are going to be much higher than that. So,
I think part of the campaign needs to, for those voters, which I don't disagree necessarily. Funny that everybody calls me, but I haven't heard from anybody saying they don't, except our beloved Jim Markolunas used to always call us about his being house rich and cash poor. But, and there's a lot of people in that situation, but they take advantage of senior services, which is part of this funding, which is huge. So that's the thing to point out. These are things that you're benefiting from as part of this increase. Plus, if we're going to not increase it sufficiently to cover what we think we're going to need, then we need to look at our priorities again. And to me, that's a great discussion to have about, should we support environmental issues or should we support senior services, public health, and food on the table?
You brought that up twice or three times today. Let's just have the conversation.
I'm bringing it up now because you're saying that you're hearing from people. So if we need to try and fund the things that are our priority, we may need to look at our priorities if we're not going to increase it sufficiently to cover what we already know we need to cover. And it does take a healthy campaign, which we should have started months ago, but we're kind of behind the eight ball, or we're way out in left field. And we're way behind the eight ball, and we need to gear it up.
And also just a reminder that we do have the property tax rebate program as well that I believe is coming back to you
In a couple weeks.
in a couple weeks soon. So just as a reminder that is another place to kind of help those folks that you're talking about as well.
Got it. So we have some options, credits, and
And most of them
Francie,
know
then
about
Kara.
those.
I would say that in terms of our campaign, that we have several points in our favor. One of which is our low tax rate, like property taxes here did not have the jolt that they had in Garfield County. And so we have low property tax rates. That's one. If they had that same value property in a different state, a different county, they'd be paying much higher property taxes. There's that. And then I think that the loss of funding from the federal government is something that people are aware of, and that maybe they'd want to do their part to help make up for that. So I think we have some arguments to make that would justify this, and I do think that for people of modest income or on a fixed income, but maybe they have $1 million or $2 million property, we're still only talking about couple $100 at the very top end, and if they could get a rebate back from the county, I don't know. I think it's sellable.
Good point, Francie.
So maybe just, I think we talked through this in more detail in a prior meeting, but maybe just for context as you all debate this, of where and how we came up with these numbers for consideration. So at the staff level, we are not trying to backfill everything from the federal government, right? The federal government still needs to cover what the federal government needs to do, but even if we didn't have all these changes, and I think the slides that they had on earlier, there are additional needs that the Healthy Community Fund alone, like as of today, is not able to cover, right? So we have not done a renewal since COVID. What's kind of emerged since COVID? Jordana and Kelly hit on it. Food access and really wanting to elevate our behavioral health. It kind of is how we've been thinking of, okay, how do we consider an increase that gives capacity to address these additional programs that we haven't really been doing ad hoc, not in a really strategic way, or have been kind of in process. And so that's where we started to look at, okay, so there's additional programming and needs in the community, even without the federal government picture that we would be looking at. And then when you start to add in the federal government picture, I think Jordana did a great job with looking at, Mountain Family Health and kind of those. So it's not about what are we trying to cover completely, it's what are we think are losses that are too critical to our community that we want to provide that backstop to. So the numbers that are provided here, we tried to be really intentional, and again, it's up to the board. It could be infinite to cover all those costs, right? But we tried to say, some level of an increase is going to allow us to engage in those conversations and provide some capacity. Obviously, 250 versus 750 gives us a different means, but from the staff perspective, we feel that any one of these is able for us to start to engage in those programs that need additional attention and giving some backstop on the federal pieces, but not taking all of it on either, trying to understand the impacts to the voters too. So maybe just as you all are debating what's the right and why are we presenting kind of a 255, 750, yes, it's kind of just a number, but it's also being very being very crucial of what is it that we're trying to add capacity to the fund for.
And I guess what I was saying before is that voters aren't going to know that we picked the highest of three. You know what I mean? It's just going to be a figure for them. It's not going to be, oh, well, we could have done this, we could have done this, we could have done this. It's just going to be a figure. So, we're not going to say we picked the highest. We could have made the highest 2 million.
This isn't enough to backfill. So even the highest number isn't enough to fully backfill the needs we're all talking about.
The highest number is still a very modest number that we put in because it will not meet all those needs. I can't remember what we looked at, but it was much higher than what
Much higher, yeah. It would take a much larger tax hit.
Mm-hmm.
So,
that's
Francie
important.
and then Ted. Sorry, Patti and then Ted.
so real quick, so if we have a decrease in property values, so the 750 drops, or the 500 drops. So this gives us a security level at some sort for maybe creating that emergency fund or a fund balance that we will have. And I think that's critical because we have had a major emergency with COVID, and we don't know what major emergencies with natural disasters, et cetera, may be heading our way. And so there may be more need in the future to have that emergency fund or that fund balance, which for those years, if property, I think they will come down in property values, and then that number will drop. So we need to be cognizant of that. So if we only go for 250 and it drops, where are we?
I don't think anyone doubts the need. I mean, we all know the need is there. It's more just how to get this thing across the finish line, and that's where I'm concerned. I probably share Greg's sentiments on just, when are the people going to say that's enough? But I don't know that this is the topic they would say that on. I don't think they would. But
I agree.
that's what the concern is. It's not a matter of, I think we all would love to see even more, even higher numbers being projected, but it's just a concern that, just all the taxes are getting up there. So that's kind of where I am, Was there a slide in a prior presentation on like how it would expect to the chart of fixed revenue versus fixed mill and how like the first few years, I don't know if we have that at all.
We don't have it in this presentation, but I can find
How
it.
like it took a few years if
To get
with
parity.
projections to see the gains really materialize. I just thought like that was helpful but if it's not available, that's okay.
Well, it's a good argument in a campaign that it'll be years before it even reaches parity with what people are paying now.
Okay.
I think that's very useful. So it's a worthwhile chart to look at.
Do we know how many people voted for it in 2018? What percent?
It's,
60 something?
It's in the 60s. It's been pretty consistently.
Sorry, what?
It's above 60%. It's been pretty consistent in the 60s each renewal time. I think the lowest was the first one, but we can get the exact numbers.
And that was when we hadn't been slapped by the state and federal funding.
Yeah, so this shows kind of what kind of where we are to start with, and then how each of these options kind of grow with time, with the fixed mill, which is all the blue lines, and then if we would have just stayed with the fixed amount, that's going to be all those green lines.
It's
So
a
that-
graph of the table.
Huh?
It's just a graph of the table.
Yes, basically. But it shows the growth over time, so it shows kind of the next 10 years what it could do based on kind of historical averages that we've seen in both of these areas.
That was the one I remember, thank you. So, you could see that in 2 years, $1 million difference, but in 10 years, it's more substantial.
$1 million is a lot of food for people.
Yeah.
In $1 million, when you think about what we're paying for some other things that we're putting millions of dollars into, this is a worthy use of $750,000
Yeah.
or
So is there a chance of board consensus in the next couple of minutes around an increase?
I kind of think we're there. Just
Well,
on the amount.
At which amount?
Yeah.
We can, so there's an increase is,
Can you go back to the table, one up from where you just were? The original table that showed, one up from where you just were, please.
I'm still digesting
I
the
made him
fixed.
go back to the prior slide deck, so.
That's what happens when you don't have
Yep.
handouts. Thank you. I think we let the interns vote.
no, you guys vote on this one.
Yeah.
Are you 18? I said high school. Are you 18?
I think it's just Greg you're waiting for.
So could you go back to the chart again? Sorry. Oh, you have to just switch. Well, come on.
No, this is our
You
fault.
knew
We
you were
should
going to
have
want to
had it.
toggle back and forth.
Put
I'm
it
just
in the
trying
slide
to.
deck for you, Ashley.
And I want numbers, he wants pictures, see?
Yeah, see, that's where I am. Just go up one, and you're there. Did you lose it?
I love it when it does that. It's so confusing.
It's your
Like you're
brain
getting
being sucked
sucked
out of
into
your
the-
head. Yeah.
Making my brain work really hard.
I put them both in the same
we
slide
don't
deck for you,
separate.
Ashley.
Oh, you're fabulous. Here we are.
I have a really important question. Who's going to take the campaign on and run with it? I'm looking at the four of you.
And Francie was looking at the three of us.
No, I'm going to do a guest column a couple of times.
Greg and I have been talking, and we've had
Well,
other.
but he may not be in on this at all,
have
but
to
Francie,
decide if I
you're
wanna
good
sell
at
it.
doing the dog
You're-
and pony show.
I could do one dog and pony show, and I'll do a guest column
Going to
and
take more
letters to
than
the
that.
editor.
It was a lot of work the last time.
It was.
Okay, I just want to look at this. The blue is fixed mill and green is fixed amount.
So it kind
That
of
would
shows if
be
you're
with
going to
the-
ask, you should just go ask the whole thing, right?
So this would be
People are gonna know
projected with increase in property values.
So this is based on the historical increase in property taxes that has happened since about 2002, I believe, is how back we went, excluding the one very large year that we had a few years ago, because that was, I think.
So now we're kind of even keel, so we're not certain, so that high blue number could actually, with a fixed mill, be not quite so high
if we saw some downturn in the property values, correct. If it was to.
That's the risk we've talked about the first time we talked about this.
Or as you all have talked about, if you saw an increase, you could choose not to take the whole mill levy for certain
Right.
years, right? Or if things stabilize, you can always choose to not take that whole mill levy that year. I would just make note, we ran this starting at 2026. I would change that to say starting at 2028. So just, I know you're kind of in the details, but that growth would be on a 2038 schedule by the time the tax was in effect.
I'm just looking at the 2028 intersection of the fixed amount at 750 line plus the fixed mill at 250, or is it 250?
I think it's the 500 that
500.
you're talking about.
Right, yeah, where they intersect, and just trying to see if, I'm looking for an argument on how we can do this and provide some assurance that we're not just trying to get, I want to feel fiscally responsible in presenting this. And so I'm looking at this wondering if an argument can be made comparing the two. And I'll have to sleep on it, I suppose. But if you want to have a kind of conversation now about raising it, somebody make a proposal.
And just for the room, we have both our 3 o'clock and our 3:15 are already here, so we're going to wrap this up over the next couple of
Yeah,
minutes. and we're
but
close
this
to a
is pretty
decision.
critical, so you guys gotta get
So,
moving on a
I mean, I think there's a couple things. Number one, we want to make sure that the board, right, what is going to be successful of a ballot passing is that we've got board members and then a campaign that feels very committed and successful on it. What we have proposed timeline is that we would come and we need to make sure that any approval of the ballot and resolution would be in your 2 regular meetings in August to make that deadline. Seeing and hearing some of the questions that I've heard today, what I might suggest is, sounds like the board is, and I'm going to test the waters here, I'll start with 750 and we can talk about that, but is interested in a 750 increase, but I think that there's wanting to know, what is that really getting? What does that impact look like? I think that staff has done a really good job so far looking at impact to date. We can come back in another work session with maybe some additional questions that you all have brought up so that you can really see what that impact of maybe a 500 versus a 700 increase would look like. So you all have time to sleep on it. You can feel really comfortable with whatever that direction might be, and show kind of what that argument would be if you were to do a 500 or 750 increase.
Okay.
Good.
That's a good proposal.
Yeah.
I'm leaning certainly toward the 500 right now. I think that it shows an increase. It's going to grow, definitely. It's going to grow fairly rapidly over the next decade. So I'm comfortable with that. It may or may not be an easier sell than the full amount, but I like being able to say that we're trying to be careful in how we elevate and increase this pot of money.
If we are coming back for an additional work session, we can bring you ballot language at that time that has a 30-year sunset language in it, that has the fixed mill structure. We can play with either the 500 or the 750 and what that actually equates to in a mill levy amount. And then we could also bring back what Patti has brought back today is what would the specific bullet points in the ballot say, and you all could we can put some information in the memo in the packet to inform a conversation about
And we'll have legal counsel
natural
by then.
resources.
Mhm.
Yeah.
Right. I'll have to tell you, I disagree with you about the deciding to cut out certain aspects of the recipients of the fund, and you're eliminating voters who would help vote for this and help pay for it.
I just said we need to
so-
clarify in our mission statement and in the bullet points, because right now they're in conflict.
Okay, yeah, we can do that, but I just want to tell you that I'm probably going to be less interested in this if we start restricting the fund. I'll share that now. I've been that way the whole time.
And you know, you've said that 3 or 4
So
times now, and you're saying it again, so don't tell me when I do that.
Liz, any wrap-up
I've said it once
comments?
today.
Just one more note. We did hear back from legal counsel while we were in this meeting. We cannot move it above shall taxes be increased. That absolutely has to be the first, but we might, well, we're going back to them, but we might be able to shift it slightly higher in the language. It definitely cannot be the first thing, unfortunately.
It's all about the helping verbs.
Wherever it's most visible.
Yeah.
So we will find some time. I need some clarity from the board. You would like staff to come back at a analysis of 500 and 750 for kind of final direction? Okay. Ultimately, I want the board to feel comfortable
Did
with
everyone
this.
nod just now?
I saw 500 and 750.
You did? Okay.
Yeah.
Just want to make sure.
I think it's 4-1,
Of 7.
so, but you could bring them both
Any
up.
other final comments regarding Healthy Community Fund renewal? Seeing none, do we need a break or do we want to
Yes,
go?
we need a break.
We want to go
Thank
interns.
you all for the
But
discussion.
it won't
Yeah.
take long to introduce the interns, will it?
Why don't we
On the
do?
schedule. the
Why
break.
don't we do introducing interns and then we could have a break before ski company? How does that sound?
We only have, I think we have 3 interns, 4, 3,
You can go.
Thank you.
4.
Thank you.
Thank you.
I'm sorry, I have to take a break.
When you gotta go, you gotta go.
That's right.
I understand that.
Stephanie, do you want to introduce the interns?
Interns are wondering what they're getting into.
Well, can
They want an
I,
interesting
I see library interns, like a judge from the badges. You're a library intern.
can I make my statement? So
Of course, yeah.
so
and we-
maybe that
sorry,
would like
what-
give Francie
grab a
some
seat
more
at the
time.
board table, though.
Come on,
Come on
come
in.
on up here and sit
Yeah.
down. Go on, sit down, guys. Come on,
Stephanie,
welcome.
introduce yourself.
Perfect.
I just want to make an announcement that our intern from Open Space and Trails, Elliot, is not here with us today. It's his birthday. So I will see if we can find a time when he can come back, like at one of our regular meetings or work session, and we can really put him on the spot because he'll be the only one in the room. But there was a little confusion, and they let him go home to celebrate his birthday. So, Elliot, we miss you, but we're going to bring you back. So, thank you, Jeffrey.
Awesome. Yeah, so I'm Stephanie. I work in the HR department. This intern opportunity has been available for the last 3 years, and so this is kind of the next installment, and we have some great interns this year and across the different departments, and it's definitely growing and becoming more of a regular thing, which is awesome. Do you guys want to introduce yourselves?
We would love an introduction, where you're in school, what you're studying.
Hi, I'm Ayana. I'm the new Communities Relations intern. I'm 16 and I'm going to be an upcoming junior at Aspen High School. So I'm excited to learn about this opportunity and immerse myself in just like new stuff.
Good for you.
Hi, my name's Cora. I'm back here for a second time at the senior center. I was at the library last time. I'm going into my senior year, and I'm 16 at Aspen High School. And I think I just wanted to do this because I'm really interested in helping the community, and I think the senior center is definitely like a very good place to start. And I'm very interested in medicine, so going in between those two.
Great, thank you.
My name is James Hernandez. I go to school at Murphy High School, and this is my first year doing it, and I'm an intern for the Aspen Library, and I feel like it's a really cool opportunity I'm able to have, and it's like I get to learn so many things of how a library works. Since before I started this internship, I have like very small knowledge of how a library works, but now I see like a more greater purpose it has in a community, and so it gives me more appreciation for it, and so I'm really glad to have this opportunity.
So fun to have you guys here. I think it's great. Thanks, thank you.
And Theron's out in the bathroom, but he's here too, and he's going to be joining us after the break.
Do any of you have questions for the board itself? Where are you applying to college? What are you thinking?
You can start.
Okay. I'm just planning to get into like law, so I think it's a great way for me to just like develop more like social and then like develop confidence, but then like also see how like laws like govern into like our daily lives. So yeah.
I'm looking into maybe Hawaii or Ireland.
Very different environments.
You look like you're from Ireland.
I'm just bouncing forth between different things, but I'm interested in very much going abroad, so that's really what I want to do.
I'm probably gonna go to a college like in-state. However, I'm really interested in studying psychology and to be able to one day become a counselor and help people with mental health.
Good for you.
Excellent. Theron, welcome.
I'm Theron. Nice to meet you all. So I'm planning on maybe going to Chapman University. I really like Chapman. It's pretty cool.
That's a
and
great school.
Pretty cool baseball program too. So I'm big on that. That'd be really fun if I could do that. And yeah, just pursue baseball and maybe do something business related.
And which department are you interning in?
Tech. IT
Excellent.
department.
Oh, cool.
Yes.
Excellent. We'll see you in the boardroom then.
And Chapman is in a great little community. It's a great little town,
Yes.
especially if you like antique cars.
I do. I really do.
So cool. And it's not far from Angel Stadium.
Great. Oh, that's great. That's really great.
Any questions for the board?
I don't think I have any questions. No.
Thanks for joining us. Thanks for interning.
Of course. Thank you guys.
And
Thanks.
thanks for
Nice
community
to meet you.
development for the support in the back row and the applause. Community relations.
It's got to be fun.
Community relations.
Community relations.
Developing community relations.
Thank you so
Yeah,
much for
welcome.
joining
Okay,
us.
you guys can stop by our offices
Yeah.
anytime and come in and chat with us. We're just upstairs on the 3rd floor.
And Grassroots, we will be on break until 3:15.
Thank you.
Join us. Coffee every time you.
Good afternoon. It is June the 23rd, about 3 p.m. in Aspen, and we have our, is this annual?
We'll make it annual from here.
We have our.
That's our intent.
We have our annual check-in with the Aspen Skiing Company, state of our business, and thank you so much for joining.
Thank you for having us. We're excited to be here.
I'll let you guys self-introduce because it seems like.
Yeah,
floor is
I'll
yours.
just make it fast. I'm Dave Tanner, President and CEO of Aspen One. To my right is Jeff Buckheister, the CEO of Aspen Skiing Company. To my left is Chris Miller, Senior Vice President of Sustainability, Community, and Advocacy for Aspen One. So this is obviously the first time we've come before you to discuss the state of our business in such a transparent way. It's our intention, like I just said, to make this an annual exercise. As we go through this, we're going to talk about a range of issues and pressures that all of us are managing and dealing with. You know a lot of this. None of this is meant to be critical of our collective history or the efforts you're all undertaking every day. We very much appreciate your efforts and your partnership and support of our company that has existed as long as anyone can remember in decades. To the next slide, to be clear why we're doing this, we put this together because we think the Valley deserves a transparent look at where our business is. The real picture, not a polished version in a pony show. We want you to understand the pressures that we're navigating, why they matter, and what we think it's going to take to get through them. Some of this requires your partnership, and we'll highlight where we think that is. We'll cover our histories, the headwinds that are bearing down on our business, and how we're evolving to meet them. And we want this to be interactive. It's meant to be a conversation, obviously, so feel free to comment and ask questions as we go, and we want the dialogue. And, as we just said off the camera, we've recently done this with the Aspen City Council and the Snowmass Town Council, and you guys have seen some of the media that's gone along with that. We want to make sure you guys hear directly for us, because even all of the media and everything doesn't cover all we're going to get into here. And, these issues don't stop at municipal boundaries. Obviously, housing and traffic and land use and long-term health of the Valley's economy are county scale challenges, and you have levers, frankly, that the municipalities don't. So you're going to see 4 chapters here today. First, the history, because what came before us can inform the future. The second is an honest look at the headwinds our business is facing. The third is how we're evolving in response. And the fourth is what we're hoping we can work together to solve, and what we commit to and where we need your help. But before we jump in, we want to pose a question that underlies everything you're going to see today, and we'll come back to this question later, is can ski stay at the heart of the Roaring Fork Valley? Can there be an Aspen idea, a Pepke vision, without skiing at its center? And we'll talk about that as we go. So for the first section, Chris Miller will lead us through it.
Thank you. Thanks again for having us. So I'm going to step you briefly through a kind of snapshot of 8 decades of history between the ski company and the community. And I humbly present this not to educate you. You all will know this far better than I do, but as Dave suggested, the idea that our past really is a roadmap for how we work together to solve the challenges of the future. You know, what we built together has taken generations, and you know, it reflects a long-term orientation. One of the core values of our company is taking the long view, and so, you know, that's an important value for us. I think we're also notable. We're a privately held company. The Crown family has owned the company for half of its lifetime, the last 4 decades, and as somebody who spent the last 15 years at a publicly traded company, I can say as a community and as an employee of this company, I feel incredibly fortunate that that's true. So a quick sort of timeline here. 1947, the first chairlift on Aspen Mountain opens. It was such an important event that the governor of Colorado at the time was here to open the lift. It really was a turning point, right? It was part of this, what had been a failed mining town, reinventing what it could be. 3 years later, Aspen hosted the first international ski competition on Aspen Mountain. It wasn't Sun Valley, it wasn't Vail, it was here in Aspen. In 1967, built in 9 months, Snowmass opened. We did free buses here before free buses were a thing. 1986 opened the Silver Queen Gondola, the longest gondola at the time that it was opened. And I'm proud now to lead the sustainability team. First sustainability team in the industry. Started in 1997. It actually predates Patagonia's sustainability team. So our commitment to sort of pushing our values through the way in which we operate our company has been a part of the company for a long time. And finally, you know, third spaces are disappearing. And so events like the X Games, and I'll talk a little bit more about some additional events on the next page, you know, are an important part of what we collectively deliver for this community. So some of those events that you know are not our events, they really are community events. They are places and spaces where locals and members of the community bump into each other in unexpected ways, and we're super proud to host these things that are so cherished by the community, from winter school, Friday morning uphill breakfast, et cetera. You know these events really well. So I want to just, and there's a lot of data on this slide, and I'm not going to talk through all of it, but I think the point here is, and this is obvious, our operations have a real economic impact on the community here, and that in many ways our operations, you know, are an investment in the community. Almost 30% of all jobs in Pitkin County are with Aspen One. That's an incredible number, right? And in many ways, this company isn't just a part of this community. The community literally is the company. We have 2,500 people covered by our health plan. For as little as 275 hours, a seasonal employee can have year-round health care, meaning that employee can take other seasonal jobs during the off-season with the comfort of knowing that they and their family have health care even when they're not working for us. 1.5 million annual ski visits, a $2 billion economic impact generated by those visitors. We spend $70 million directly with Valley suppliers and contractors every year, and $80 million in on-mountain investments just last summer alone. And then finally, it isn't just about our investments in the community and our operations. It's very much about our people and the role that they play in this community and that the community plays in the company. So our people are a part of so many of the things that the community is working on, from the Transportation Coalition for the 21st Century to helping co-found the Valley Health Alliance. Like, our people are really invested in the community, as you well know. Our philanthropic efforts, almost $5 million in Environmental Foundation grants since its inception in 1997. Last year was our biggest philanthropic year in the company's history, almost over $4 million in cash grants last year alone. And just noting support for trying to keep this sport in this company as accessible as possible for the community. 10,000 community stickers given to locals, making food and drink more affordable on our mountains, something I know so many people appreciate. 5,000 annual free skier days to local schools and nonprofits. The value of our Compton discounted passes through the chamber, through free passes, has a cash value of about $27 million. So 20,000 annual comp or discounted passes. So a little snapshot of the impact that we have and the way in which our partnership brings that to life.
Any thoughts before we go to the next session or questions? I want to throw one more thing that was a couple pages back. You don't need to go back, but our support for healthcare is real. Employees working as little as 280 hours per year, and their families are on our healthcare for the full year. That is pretty unheard of out there in the broader industry, and I just wanted to add that one on. So Jeff will lead us through some of the challenges.
Yeah, thanks, Chris. Thanks for having us today. I take an immense amount of pride to be here amongst the leaders of the community, but also representing a company that I've grown very proud of over the last 3 years, and just in what we've done over time and how we partnered together over time. It's amazing. And I think we have one of the best places on the planet in terms of a mountain town with 4 vibrant ski areas right at our fingertips. But it doesn't come without its challenges. And I was reflecting earlier today actually on the 80 years, of our history, and I'm sure in every one of those 80 years there was a series of challenges that the teams have tried to cover, tried to get through, had to be innovative around, had to partner and work together with the communities, and I think this time is no different. But I do think that there tends to get to be a bit of a prism that, like, things are fine at SkiCo, and everything's good, and that's actually the reason why the community's struggling in certain areas. And I think we're feeling it in a lot of ways, and we'll slid to the next slide. And I'm going to cover all of these in a little bit of detail. There's a page on each in your packet, but our industry isn't exactly thriving either right now, and we'll address that, but it's consolidated a lot. That's changed the dynamics in terms of purchasing and pricing power and a lot of other things, and it certainly made it a different game for independents like us. Combine that with affordability. You guys talk at this table probably almost every single meeting about some aspect touches on affordability, and we're seeing it on our side, and we're seeing it a little bit of a window into that we have to be cautious as we go forward. Very much mixed in with that is pricing exhaustion, and it's the ability to keep price going while also sustaining a very capital intensive business, which we run, and we'll touch on some of those numbers. We've talked long and hard about workforce housing. The free market obviously is not a place for our employees to go and find housing, not just up here in the Upper Valley, but up and down the Roaring Fork Valley, and something that we really need to continue to partner on and think about innovative solutions. And you can't go a day, I guess, coming up this far without being impacted by traffic and congestion. You guys know this as well as we do. We've got some discussion points on that. And after the year that we finished, the coup de grace, the final point, climate. I think we saw the worst of it this last year, the worst year in 50 years, and the volatility that caused. I think just probably for the...
We all should.
Knock on wood.
Yeah, for the economics of our town, but certainly in our business we felt it, and I think, I can imagine that restaurants up and down and small businesses and local businesses all felt it as well. So we'll hit to the next slide, Chris. Flat ski industry I think is a problem for our valley. I think it's a driver of our community. I've often said that when the bull wheels are spinning, the heartbeat of the community is spinning, and that's not meant to say that the other things don't matter, but I do think it's a cornerstone of where we are. Across the industry, essentially we're seeing 0% annual growth. That's U.S. participation since 1996. yes, we've had some ups and downs, and COVID brought a bit of a resurgence, but participation is mostly flat. We have, from a unique perspective, the same number of skiers now, from a unique guest count across the industry as we had 30 years ago. The number of people doing it is not growing. All while, am I not allowed enough? I'll get it closer. Sorry. Happy to start from the
Easy,
top.
Francie.
Carefully might.
No,
So visitation's flat, and unique visits are flat. All while the population in our country's grown by 30%. So we're not seeing the dynamics there. Our visits here in Aspen, snowmass, are down 3 consecutive years in a row. Obviously, this last year being a heavy decline. But since the COVID kind of revival, we've seen things drop, and we're concerned about it. The aging population in our skier base is a big concern as well. Baby boomers were a big group of skiers, and they're skiing less and less. And we're also finding that millennials and the younger generations with attention deficit disorder on screen time and all of those other things, it's harder to get them on the mountains. And we believe that getting them on the mountains is a super important aspect in all of our other strategies, and certainly on climate and resiliency there. But we're not alone. Vail Resorts and Alterra both have had some challenging years, all while they've grown from 5 resorts to 42 at Vail Resorts, and Alterra from nothing to 17 with I think 40 plus worldwide partners. So the industry's consolidated, it's growing, and I think the independents are out there, battling against it, and it's narrowing our guest pool. The price of passes is an issue out there, and so people make their decisions early and ski somewhere else and choose not to do their trip to Aspen, which may have been in the cards in the past.
A couple other points just to add on. The 3 years down, this third year down isn't just because of the snow. Even before the snow happened this year, we were planning, given all the trends we're talking about here, that it was going to be down, so we budgeted down. We were down 21.5% on visitation year over year. And in a high fixed cost, capital intensive business, if you do the math equations, that is not a good trend, obviously. And then, on the competitors, they're going through CEO changes. Those don't happen unless something's not going right. And as of last week, Vail has an activist who's moved into their stock, and what they do is try to take the company private and break it up ultimately because they think there's more value in doing other things. So it's a very challenged industry landscape right now.
Yeah, and I think just to keep in mind that our estimate is that 40% of Pitkin County jobs are linked to the ski industry in some fashion, and we just think it's important to keep an eye on these trends, and wanted to share that with you all.
Any questions on any of that? Nope. Okay.
I got one.
Yep.
And,
Yes, sir.
and two.
Yeah.
You can table them till the end.
Yeah, and we might hit some of them later. And we'll let you.
Reinvestment risk.
Yeah,
So
we'll get to that.
Cool. That was
Yeah.
one.
Yep.
And then I'd love you to circle back on third places, because so part of what we've had over the past year at the board table was high school students.
Yeah.
And they're saying they're lacking third spaces. So even, there's an upcoming Smuggler Mine party, and we said, okay, what are you doing for the high school? So if you want to attract the younger demographic, what the high school students came in and said, look, we want to go to New York Pizza. It's our only third place, but right next to it's a pot shop. And so I'm not saying you have to solve that, but I'm interested to see how your demographics change over time. So, and you can circle back on both.
We'll circle back at the end, yeah.
Thank you.
Next slide, please, Chris. So from an affordability standpoint, we also need to be very conscious. And I think our company has done a admirable job over the years in terms of keeping locals' cost to ski in a very tight range. In fact, I think we're within $100 of staying exactly on inflation since 1962. So that is a wide span, something that we're about to launch our community products on July 1st, and we'll be in a very similar zone. And so that said, the cost of everything else is increasing at rates that are just, inflation isn't even in the viewfinder. Roaring Fork Lodging at 218% above inflation over that same time period. All in Aspen Vacation is 25% more expensive than it was in 2019. That also happens to be accelerating at a rate that's quite a bit quicker than our competitors. And when I talk about like Vail, Beaver Creek, local competitors that, I think have the same economic pressures. Guest mix is shifting. We're seeing a lot more lifestyle tourists and less adventure-seeking, skiing, mountain people. And we think that some of that is tied back to affordability. And skiers, I think, are more valuable guests. They have the highest engagement. They have the highest length of stay in our town, typically. They're not here for a Instagram post and a quick meal and then out. They're here because they want to experience this place and the mountain culture that it provides. We've mentioned it a little bit, but this last year, paid skier visits for us, so tickets sold were down 11%. Or actually, over the last 3 years, they've been down 11% on average. And this last year, they were down in the 20+%. So, we're seeing a lot of the pressures. And when the mix shifts away from skiers, we feel it. We think the community feels it. And it's something that we need to keep an eye on.
Just a couple of data points here. When an average guest comes and visits here, the amount they spend that's within our control, think lift tickets, on mountain restaurants, whatever, is only 20% of their total spend. So people are like, well, you're causing some of this problem. Yes, at a 20% level, but this is way outside of us. And if you look at the average trip, a ski trip for a week, compared to the average resort, we're about 50% higher to cost, and compared to even our top competitors, because of the lodging component mostly, we're 20 to 25% higher than others.
Next slide.
You're comparing to Europe. You're comparing to the rest of the
We're
US?
not. We're comparing to the U.S. and the Europe's thing is a whole nother thing.
Right.
It is cheaper for many of our destination guests who come from New York, Miami, whatever, to now fly to Europe and vacation there.
Thank you.
And we're seeing more and more of that.
Yeah, the data really shows a surge of Americans going to Europe. It's not showing Europeans come to America.
And in fact, our international visitation has gone down, partially due to that, partially due to immigration policy and all the rest of it.
Yeah. So while the affordability dilemma is real, it's also real on the operating cost side. This is a big dynamic for us, and some of these numbers are pretty staggering. But since COVID, our operating costs on average annually are up 30%. So we're talking, in the last 5 to 6 years, we're seeing a real ramp. Insurance, utilities, wages, materials, our healthcare bills are going way up as a self-insured entity. It's all structurally higher. So that's on the operating side. On the capital expense side and the investment in the mountains, which I think you've all seen we've done a lot of. And we feel like we've been catching up to some of these European resorts that we view are competitors. But yeah, I mean, I think, in a 30-year span, a chairlift went from $2.5 million to $25 million. Steel, the components, everything is up. Back when, at Snowmass, when the El campus was built at the top of the gondola, it was $12 million. I think everyone thought that was egregious at the time. We're going to finish Uller off this year at a total bill of about $42 million.
For a single restaurant. It's a big
It's
one.
going to be
It's
open.
beautiful. It's going to be world class, but it's a big number.
So these costs are real, and we're not here complaining to you because these were our choices. But I think it's just it's a little bit of the question about reinvestment that Jeffrey asked earlier is real, and I think what happens here is this loop that we've tried to articulate in the lower right of this slide is okay. So as costs are increasing. What happens typically, a company would handle that with raising prices, and we think that we're past that. We think that we've accelerated through a lot of the price inflation that we can handle, that our skier base can handle. So then it's on cost reductions and which can impact the experience, which can impact then the overall feeling that people have when they come here and their willingness to return, which then snowballs into maybe a reduction in reinvestment in the future, which then further degrades the experience, and you get it. It's something that I don't know if we've had it like this in the past, but it's definitely real now.
The industry, if you look over the last 10 to 12 years compared to other industries, has taken far more pricing. That lever is kind of exhausted. The consumer's pushing back. You've seen Vail Resorts this year, for example, start pricing their past products less than underlying inflation, which is indicative of that. And if I, told you all the returns that this business is to the Crowns, and they're in this for a lot of different reasons, this is not a good investment for them. It is a return number that is much lower than you would expect because of the capital intensity of this business and because of these dynamics.
Okay. Let's talk about something more inspiring, the housing crisis. And this isn't news to you all. Our calculations on some studies that have been done is that we are 5,000 workforce units short across the Roaring Fork Valley, and we think 2/3 of that is in the Upper Valley alone. $3 million median home price in Pitkin County. I'm sure you are all attuned to that. At 100% AMI, the affordability index would say that you should target a house for $325,000. So quite the gap there. Obviously people aren't buying the $3 million house. They're going further away from where they work and where their community really is. And they're oftentimes going away from transit solutions, and they're going away from the connectivity of what makes things a community. All the while, since 2019, home prices are up 174%. 37% of Aspen area workers over 50 plan to retire within the next decade. So one of the forecasting elements in this data that we're showing you is the retirement wave. And we anticipate that as folks age and get older in our community, which I think we all want to celebrate. We want them out there on our Silver Premier passes and on our 90+ pass. We want people out skiing. But the reality is a lot of those folks are housing secure. So as they leave the workforce and become what we hope is a ski bum in our town, they likely are not going to be leaving their secure housing. So their replacements, at least in our business, and I think probably in a lot of dynamics, will not be housing secure. And they're also not going to be looking for what we have today is 1,300 more transient, more seasonal workforce beds, which we're really proud of. I think that's a great number. We want to build that. We see that we need more. But we only have 80 units today that are family style. And that's the type of unit that's going to be needed to attract an experienced worker to our valley that might be, taking over lift maintenance or running, grooming on one or all four mountains, or a mid-level executive or even a high-level executive. Those family style work, units are going to be critical to all of us in the future, and it's something that we want to talk about. You can see here, by 2030, the middle boxes, we need at least 200 new beds on the seasonal side, and we are forecasting 185 units in that family bucket that I just mentioned.
No, those are not. Those are
pillars.
additive.
Yeah,
right. The numbers in
incremental.
the white boxes are all added. So. Yeah.
And then 5 years down the line, we're going to need at least another 80 and another 185. So this crisis is in front of us now, and I think while, today it may feel good, or it may feel like we had enough this year, or maybe for next year, the wave is coming, and we're trying to prepare for it certainly as much as we can.
And once again, I want to stress this: the 1,300 beds we have today were built for an era that is the single lifty transient coming in and out. We now need family units. We can't recruit even the upper echelons of our company to come to the valley anymore because of this dynamic. And you can do the quick math here on 280 beds and 370 units times the $1.5 million per unit. You're talking $500 million investment, and this does not contemplate us growing at all. Mm-hmm. And by the way, I want to say here, we are not pro-growth, trying to jam the throttle. We are looking for stabilization in visitation because that helps us manage it. We're not underwriting. We're not planning on getting 10, 20% growth in anything you hear. We know the pressures in this community. We also know how important that our experience is premium and our lines that don't exist usually. And so, you know, I don't know how many businesses in the Valley are really looking forward with, you know, the analytics we are at this problem, but the wave is coming. And, you know, that's why we're.
And look, together we've done some amazing things, right? You know, we preserved 139 homes in the mobile home parks. We're trying to protect residents. There's more of that work in front of us. We've gotten creative with tenants for turns, which locks up 100 to 200 beds a year in terms of, you know, inventory that doesn't look like it's out there, but that we help get to market for employees with an exchange of a ski pass, which I'm grateful for because we're a ski town, you know, and you know, it's nice to see some folks that have extra space sign up for those programs. You know, we've recently done SHOP. We've recently been in front of town of Snowmass on SHOP. And we're working on a project down Valley in Elgibel, both of which are facing, you know, at any moment in time, it feels like some pretty stiff headwind in terms of people feeling like they're good things for our future. But we certainly believe in them. And while it might not be in your jurisdiction, this is a regional housing problem more than anything else. And you know, I don't think a lot of the work is enough. And so we're going to keep forging forward, hopefully, with all of you.
Any questions or comments on that? Okay.
I actually, you want to pause for a second?
Yeah.
I think I've shared this with some of you. So this board approved, for example, workforce housing at the ABC a couple of years ago.
Yep.
At the North 40. And we, you know, through the process, cut it. We cut a few families out. And so now we have first responders that don't live next to the apparatus.
Yeah.
And so, you know, we got the top floor removed, but we removed multiple families. And so, I'm saying this empathetically. I realize this is not our jurisdiction, but I wish Pitkin would take a larger voice in all the development going on in the Roaring Fork Valley. We hear it from our neighboring commissioners as well. But I think when we have the right site in the right place, whether that's adjacent to the mountain or down valley, but adjacent to transportation, we need to maximize those opportunities.
Yeah, and every one of them, it starts here and it gets throttled back along the path, which then increases the cost per bed, which then makes it less feasible economically to do. Right?
But I will say, 5-10 years later, I'm looking at Suzanne in the back, that we made a mistake, right? We made a mistake as Pitkin in, I'm not saying listening to the neighbors, but at the end of the day, if we had 5 more families with first responders in beds, I just look at that.
Like at the dispatch center.
Yeah, and just to add on, just so you know, our philosophy on this, as we try to build, we look ourselves as catalysts for communities and leaders in the community. We plan on cutting in, and we're already having conversations with firefighters, with teachers, and as we build, for example, Elgibel, which is hopefully several hundred units, that's not going to be all us. We're going to bring the community in with us and be a catalyst ultimately, because we have the capabilities and the resources and the responsibility, frankly, to do that.
Is tenants returns growing? Is that
We've grown it some. It's starting to hit a limit, and the limit is the rate that which the landlords will actually part with their 1 or 2 bedrooms.
But are you playing with the incentives there to?
Yeah, we are.
Every year
we're
play
putting
with
more
the incentives,
marketing behind it.
In the storytelling marketing was a piece that we added, and I think last year was better.
I think we've grown at about 30% in the last few
I think
years.
like we have, whether it's APCHA right sizing, when you talk about the cost of building new, we know we have a lot of capacity that's underutilized.
Yeah.
And
I
I think that's something as you present and we think about, well, what can we actually do up here to answer some of this?
No, I think incentives to make sure that.
And maybe that's ADUs, and maybe that's policies because I think there is a lot of unrealized capacity out there. And when, we had a talk yesterday on the housing needs assessment, which is making the rounds around the valley, if you haven't seen it. And I think one of the stats that stuck out to me was that they said there's 109 acres of undeveloped private land left in the valley. So when you think about needing 5,000 homes or 7,000 homes or 2,800 homes, whatever model you want to use, you say, well, if all that's really left there by that one metric, it's like, I don't know how you ever get there, except for maybe trying to make the most of what's already here.
Well, in the 2 announced things we have, plus 1 unannounced privately owned piece of land, we think we can actually get to these numbers if we were able to get them through and get the amount of units and whatnot. But yes, the unlock and the excess capacity and what you guys can do that from a policy perspective is a real thing.
What kind of units, like the ones that you have at Elsbeth or Willits?
Willits, actually bigger. I mean, you know,
But
these
that kind of
yeah,
situation.
a mix of 1 bedroom, but more
So
2
they're
bedroom,
coming
3 bedroom.
there, that's like a dorm almost. They're
Well,
Yeah,
we've got a
staying
mix
while
now.
they work.
We've got a mix in our thinking, right? It's,
Uh-huh.
you know, where appropriate, you know, the 1,300 that we already have, which are more for the seasonal employee. But we're very focused on the family style housing and the you know, multiple bedrooms and, you know, something that can attract hopefully an employee of ours, and if they come with a spouse, an employee of another entity in the county, and that's a win-win.
And they can have a kid or 2 and stay and not be
Yeah.
forced out.
And so what happens to that housing in the off-season?
We work with the community to spread it out as wide as possible, and most of that 13 doesn't get, or some of that 1,300 does not get used, but we partner and put it out there for utilization,
We have a project for you.
which is
I have sort of an existential question.
I love them.
So, so what happens if you can't grow? Can you maintain?
No, that's
Okay.
the existential question. That's the underlying, and I don't want to come in here doom and gloom, but if you can't staff the mountains, it will inevitably lead to some sort of reduction in services. It could be hours, it could be runs, it could be lifts, it could be entire mountains. And that's what's at stake here.
So you're at a crossroads for sure.
Yeah, that's why we're sitting here.
Yeah.
And by the way, we've seen this coming. This is not news to us, and I'll get to what we've been doing. You know, we haven't talked about this publicly because we've been working on getting our own house in order and all the stuff we've had to do. But you put this trend line out 10, 15 years, it's not a pretty picture if we can't staff our mountains. It's not a pretty picture if skiers keep declining and that we're too hard to get to and we're too congested. And you guys have done yeoman's work on the airport, and we thank you every day for your leadership in that. But the trend lines are not good, and we think this is, you know, while this has been talked about forever, we're talking about this more directly because, you know, we are the anchor of the economics of this valley, and if we're feeling this and we're coming to talk about it, it's a big issue.
And I have one more question, if that'd be okay.
Yeah, as many as you guys want. That's why we're here.
So below your executive level, you must have a lot of people who are part of families.
Yeah.
And so I would imagine that attracting that level of employee is really difficult right now. So
It is.
I guess more than a question, I would just say I hope you would look at housing that's not just a little apartment, you know, in a big building, and really sort of try to talk about anchoring, try to anchor
Yeah.
those, that level of employee.
I mean, if you look at our entire vision for Eligible Crossing, it's a
Say that
community.
again, Dave?
If you look at our entire vision for Eligible Crossing, the Don Valley one, it is a community. It has townhomes. Like, we're not building full houses, but we're trying to push
Like-
that as far as possible.
Like
I'm not-
duplexes and that.
Yeah.
Yep.
We're not interested in building single beds anymore. Like, it is, and by the way, this is not an executive thing, but I'm just telling you, it hits all ranks.
It's all
And
rent?
the numbers that we're
All
meeting-
ranks
all
of the
ranks
company,
of the
yeah.
company, right? And the point about raising executives, of even the people who theoretically get paid the most can't afford this dynamic.
Yeah.
Okay, I think we beat that horse.
We beat that horse. We'll shift to the next one, which is because of the housing crisis, folks are commuting and traveling a lot, and the worsening congestion is an issue. And, you know, after 3 years of declines in skier visitation, averaging about 11% per year over the last 3, traffic is only getting worse. And, you know, so while we, I think, can appreciate that skiers drive some form of congestion into this valley. I can tell you as a Down Valley resident, my favorite days to come up valley and all the way into town to ski Aspen Mountain are Saturday and Sunday. And the situation is more than skiers, and we actually think skiers aren't the contributing factor to the congestion we're seeing. It's what you all know, which is the community around us, the service sector. Snowmass Canyon's traffic counter, I think it broke after it hit 22,000 vehicles a day. That's double what it was, back in 1993. So that's certainly a point. 30 to 40% of entrance to Aspen traffic is pickup trucks, service vehicles, largely serving what sometimes are vacant second homes. 65% of Aspen's workers commute from 10 plus miles away, 23% from 50 plus miles away. So the housing that they are finding, we're not talking Glenwood, we're talking beyond Glenwood and down the valley. And of course, that all contributes to the overall congestion on the road because despite, many of them taking public transit and RAFTA's huge effort in this valley, which has been, which we highly applaud. It's just, it's not enough and as convenient as it could be. So it's, we see an economy that's shifting more from a resort-based to a residential-based. So job locations now are decoupled from transit planning. So many of those that do move into this valley and it's not easy to get to the transit center. The first and last mile or the fifth and last fifth mile, right? Like those sections are huge for people and make public transit difficult. So
I agree with you, Jeff, that the traffic is not generated by skiers. Most of the young skiers I know ride the bus.
Yeah. Yep. Well, the bus is way easier, right?
And I just wanted to jump in here and say that I think Pitkin County really appreciates your efforts to get people around not in their cars.
Thank you. Our partnership with RAFTA is strong. We invest in it, as you guys know, and we can.
And to that point,
it's one of the things that we need to look at when we talk about the airport too, and the number of rental cars, because where are they going in their rental cars?
Right. Yep. Hopefully not just into town once and then back to the airport, but. No, and look, we've been involved with a community discussion that's been going on and started around new solutions that I think are out there on the table, whether it's gondolas or rideshare models or pricing incentives, and I think those are important things, and we're particularly excited about some of those ideas, knowing that we're pretty good at running aerial transit. We believe that in a ski town like this, that's a solution that we should all be really considering and diving in on. So this valley's led on innovation before. We believe we can lead on innovation again. I think before you innovate, you need to really understand the problem, which is what we're trying to get our arms around here. All right. So if it weren't enough, like we also have the climate problem, right? And look, none of this is really directly related to last season, although there are a few points that are pretty poignant on what happened. But on average, 3 degrees Fahrenheit is what we're seeing the average temperatures increase since 1980. Might not sound like much, but it equates to 30 to 40, we'll call it. 30 is our low estimate. We've been actually told that we're a little low on that, of days where we're not reaching zero. So frost-free days have grown by 30% in the last stretch, and so that's shrinking our windows for snowmaking. It's overall contributing to the shorter winters that we're experiencing. By 2050, our moderate projections show that the effective season length will shrink by 20 days. So we have the little chart here. You can see observed season length, which would be if we didn't have snowmaking, effective season length, which is the impact that snowmaking's had. So right now we're seeing 99 days and 143. Our average season is typically in the 140 to 150 days of operation. We think it won't be too long before that's 125. Coincidentally, I just spent a lot of time this spring at some industry events, National Skiers Association and Colorado Ski Country. Colorado this year averages also just right on that number, 144. This year, the average in Colorado was 125. So we saw what the reality could look like this year if we want to use that as a marker. Because of this, we have to anticipate that snowmaking will become much more of a priority. It's hard to invest a lot in snowmaking, and we are doing a ton. I think we have $6 million of snowmaking enhancements going in this summer alone. But if it doesn't go below freezing, then it doesn't really work. Right?
Yeah, I mean, we started amping up our snowmaking significantly 3 years ago. Like I said, we've been looking forward. We've actually increased it even more, but that then adds another cost to this whole reinvestment risk
Talk about
scenario.
the water coming out of the river going to make snow, and how much of that actually returns and how much evaporates, and talk about that a little bit.
The data shows that, and we can dial in on the exact, but my recollection is that 80% of the water that goes onto the mountain returns to the stream, right? So I think not a lot different than natural environments, that, you know, what's happening with the rest of the natural snow that's out there. I don't think all of that makes it to the stream either. I've actually, you know, you see that we're testing the snow secures technology, and this year is really, you know, we're not expecting this to make or break next season, but we are expecting to learn a ton from it. I've also heard recently of resorts that are actually working with their municipalities to make snow late in the season, because if you make snow late in the season, it actually stays in the watershed longer, rather than running off early and downstream when the flows are really high. And so there's a lot of innovative thinking out there.
So you can extend the spring season.
Well, not just
Not even that. I think some resorts are being paid by their local communities to not to extend the ski season, and maybe that's a byproduct in some of them, but to actually
save
have it
the
up there so
water.
it melts slower.
Wow, that's so interesting.
It's like a reservoir,
Yeah.
right?
Yeah.
Yeah.
So I think there's some innovation in this whole discussion. You know, certainly having water around to fight wildfires is something that we're all pretty worried about right now. I think, you know, outside of drinking water and regular sustainability, but it's, you know, it's part of the climate crisis.
And despite all this, I think all of you skied this year and saw we had probably the best conditions in the Rockies despite this, because of the capabilities of our snowmaking and grooming teams, and we can't say enough how awesome a job they did despite the horrendous conditions. All right. So that's the honest picture of what we're navigating, and not every resort is having this conversation openly with communities. I think you guys can look at the toxic situation that exists in Telluride right now. That I don't know ultimately how that gets solved. Vail Resorts' relationships with a lot of their communities is very complicated. I think you guys probably saw the Park City Ski Patrol strike last year. That was a model on how not to do it. You know, Jeff and I sat at the table with our patrollers for 7 to 8 months last year and got to a 3-year deal that made them the highest paid in the industry, and we have an incredibly, you know, trustworthy relationship with them. You know, all that being said, like I said earlier, we've been at work for the last 3 years transforming our business to offset the headwinds that we laid out. When Jim Crown recruited and hired me 3 years ago, the strategy that he and the larger Crown family and myself, they tasked me with, was leading an intentional evolution and transformation of our business to react to all this. Not because we were a failing business, but because Jim and all of us could see these pressures building, and we knew that any business that isn't innovating is ultimately decaying. Our goal was to offset the pressures in the valley and in our core ski business by catching up on investment in the ski business, which we've done substantially in the last few years, and other areas like employee housing, by building new capabilities and innovating within our organization to better serve our guests and our employees, and to very importantly, expand the business outside the valley. Expanding the business outside the valley through our hospitality platform and through Aspen Collection gives us the growth that allows us to have the capital to reinvest back into the core business. In essence, we wanted to evolve and transform to remain innovative, vibrant, resilient, and to perform financially well enough to remain independent and family-owned at least for the next 80 years. We're a values-led business, and we're proud to call ourselves that. What makes us value-led is not just philanthropy or volunteer hours, as important as those are. It's how we incorporate our values into our day-to-day decision-making and our operations. It's investing in the first all-electric on-mountain restaurant in the industry. It's giving our frontline hourly workers their first ever bonus in the company's history last year. It's using our platform to press for economy-wide solutions in the climate crisis and a myriad of other things. We're by no means perfect, but we hold ourselves to a higher standard, rooted in our values and in this place, and we expect you to hold us to this standard. Our vision, as you can see here, is the Aspen idea, the pursuit of renewing the mind, body, and spirit here in this place and in service of inspiring a better world. Here's what our business looks like after we reorged it about 2.5 years ago to move from one Aspen skiing company and a broader set of businesses managed under the Aspen One umbrella. The 4 mountains are always going to be at the core of Aspen Skiing Company. It's where our roots are and will always be. Around that core, we've built a growing portfolio of hotels, residences, and clubs under Aspen Hospitality, under the Limelight and Little Nell brands in Aspen, Snowmass, Sun Valley, Mammoth, which just opened this year, Denver, Boulder, which just opened this year, and we're currently building in downtown Charleston, Limelight, and in Rockefeller Center in New York, Nell. Aspen Ventures is our innovation engine to take the Aspen brand and ethos into different categories, including Aspen Collection and Apparel, an emerging experiences business that we're building, and also various real estate development activities. All of that's managed under a set of new and strengthened shared services. So think marketing, digital, sustainability, finance, HR, partnerships, business development, capital allocation, all under the Aspen One umbrella. We want to be clear what this expansion is and isn't. It isn't us taking eyes off the Roaring Fork Valley. It's how we build the financial resilience to stay here as an independent family-owned company for the long term. The growth funds the stewardship, and that's the model. Our foundation is intact. Our vision, we've talked about Roaring Fork Valley mountain culture is our DNA, and long-term stewardship, employee care, and community commitment are cornerstones, and none of that moves. What's changed is how we operate. We're running as a genuinely integrated enterprise, not a collection of separate businesses under a ski business. We're pursuing growth deliberately and with sharper performance expectations, because stewardship without financial performance isn't sustainable, frankly. We've built structures that make us more accountable to each other and to this community, the same values, but a company structure and management philosophy appropriate for the amount of capital that's being invested in this business. We've invested over $1 billion of investment in the business in the last 3 years, with more in flight, to better serve our guests, to protect the ski business, expand the hospitality business, and to begin to expand the Aspen brand, and to invest, importantly, in the livelihood of our employees and our communities. We've had, along the path here, pretty seamless generational leadership transitions. We've made, like I said, huge on-mountain investments in lift pacing, snowmaking, restaurants, including the Uleroff we just talked about, facilities, experiences, the patrol contract. I talked through the hospitality investments already. And we've improved our corporate capabilities and our operational and executional discipline to power our evolution and growth. Along the path, our guest satisfaction scores, which we measure religiously, and our employee engagement scores, which we also measure, have improved and or held steady. Importantly, our guest satisfaction scores this year, with the horrible conditions created by Mother Nature and made up by the teams, were flat year over year. It just shows, how much our teams are keeping the eye on the ball. And we, continue the world-class investment in our employees and partnership with our communities. So we're becoming a more focused, resilient set of family businesses. We're rooted in the Aspen idea. We're built to perform and reinvest and stay in business forever. And it's not a slogan, it's a commitment. And our success is rooted in the success of this community. It always has been. And given everything we've walked through, it's more true now than ever. Any questions before I go to potential conversation on solutions? Francie, you're smiling.
I'm just wondering if you sleep at night.
Not much. No joke. I mean, our business, this is off script. I can't say enough about how our teams have rallied, have responded to the changes, have understood the mission we're on, and we have been rebuilding our business while running it. It has become, for many parts of our organization, 2 jobs for the last couple of years to do this. And we're through a lot of the changes, but as you can see, there's a lot to get done here to continue to take care of things, right? So, we've been straightforward here. Now we want to talk about where we need your help, and we're committed in return. Many of these things we've put out here are ours to manage. We know that. We're not sitting here with our hands out. We're not asking for anything. But housing, traffic, and the long-term question of what kind of community this valley is building, those can't be solved by one employer, all the employers, even you alone, right? It's a community conversation that requires policy decisions, zoning flexibility, and a shared willingness to name the hard things, and that's what we want to discuss now. And it's also, we're going to come back to the question, can ski stay at the heart of Roaring Fork Valley? Yep.
I think it's just kind of dawning on me that you could probably just cross off Aspen 1 and put Pitkin County here and not really have to
Snowmass
change
said the
too
same
much, and it would be exactly the kind of things that we're confronting here, so I
Yeah.
just think.
Yeah, and we realize that, right?
Okay. Wait, Snowmass already said that?
Yeah,
Good idea. That's brilliant.
Yep. So, we asked the question at the beginning, can we ski stay at the heart of the Roaring Fork Valley? And we just spent some time with the data. I won't go through it again. But all that is what happens when, wait, are you on the right side, 24?
Yeah, 24.
Yeah, okay, all right, sorry. All that starts to, be in question when, things start to drift ultimately. And when a ski valley slowly becomes something else, not by decision per se, but by default, right? A residential enclave, 43% of the homes our data show here are vacant some portion of the year. Workers commuting from Rifle, a valley whose economy serves the property market instead of the other way around. Or worse, a valley without a core. The ski economy hollows out, tax revenues decline, the employer that anchors the 40% of Pitkin company jobs that we talked about pulls back, and we're left with a valley that's lost its reason to exist with nothing to replace it. And our answer goes back to what we've done for the last 80 years and Walter Pepke's ideas as well. Pepke didn't arrive in Aspen in 1945 with a business plan. He arrived with a question not unlike the ones we're talking about here. His answer was the Aspen idea, a community of peace with opportunities for man's complete life where he can learn a living, profit by healthy physical recreation with facilities at hand for the enjoyment of art, music, and education. It was the founding charter of this valley. And it worked because citizens, the government, the nascent ski industry were willing to hold it together, not because any one of them could do it alone. Then coming out of World War II, the imperative was peace. Now it's balance, a ski valley, a real one, where people who make it run can afford to live here, where kids are born and can go to school and stay here, and where the mountains of reason and not just a backdrop. A community can't flourish if it's fracturing. You knew that. Pepke knew that. And so let's go to the next slide. Here's the honest picture of where we are versus this vision. I'm not going to go through all of these numbers, and this data is not a criticism of the community or any single actor. It's simply data. No one person or organization built this, and no single actor can fix it either. But, there's some scary things here, ultimately. Any questions before I keep going? Okay. So this is the proverbial, it's not the money page, but the money page where, we expect a little bit more conversation on around this, and this is where we stand specifically and what we're committing to and where we need dialogue and community help. And once again, we're not sitting here with our hands out asking, and you guys are across many of these issues already. On skiing, we commit to protecting and growing the ski experience, investing in the mountain, the snow, and the programs that keep skiing accessible. What we're asking is that the community keeps skiing at the heart of the valley's identity in land use decisions, in supporting innovations on our mountains that we're trying to do, and how we talk about Aspen, and in the priorities we set together. We believe that this is the answer to the question we asked at the beginning. On housing, not surprising, we will build more affordable housing to support our workforce and the broader community, like I said, at no cost to the valley taxpayers. Shop and EJ crossing, like we talked about, are underway, both with headwinds. More projects are coming. We'll build with our capital and not just fund or ask for payer developments, and we take our role as a catalyst there importantly. And what we're asking is streamlined approvals for employee-sponsored housing, embracing cross-jurisdictional collaboration, including county-level zoning flexibility and coordination across municipal boundaries, and that we all work together to overcome some of the NIMBYism that stalls projects that deliver on clearly articulated master plan goals. On traffic, we're going to advocate for mass transit, always have, and prioritize reducing single occupancy vehicle trips. What we're asking is and you guys are already doing this a lot, but making congestion reduction an equal priority to infrastructure-based solutions, to help us reframe the conversation that the traffic is coming from jobs and residential growth and not skier visits. You guys have been the biggest supporters of airport modernization, and we thank you for that. And as I said at this table a couple months ago, we can't understate the importance of getting that airport done on time in the right way. But we also, as Jeff mentioned, we need to be open to new infrastructure ideas like, the nascent gondola thinking that's spawned from the incredible work of the transportation subcommittee. And, this isn't in your purview necessarily, but to continue with haste the good work that's going around the entrance to Aspen, and that needs to happen with some velocity. And once again, many of these themes are consistent with the transportation subcommittee, which we very much appreciate their work. On locals, we're always going to support and honor people in place. It's in our valleys. Like we talked about, the chamber pass and our pricing tracks inflation. And what we're asking is, we all work together to protect and expand the programs that keep families here: childcare, local preference housing, essential worker support. And on transparency, you have our commitment that we're going to publish and have this conversation annually in plain language every year. And, we're asking that all Valley employers and developers are kind of held to that same standard of public accountability in this. So I'll pause there. Go ahead, Jeff.
Good for a minute.
Any questions or comments?
I could go back and talk about, what I appreciate is that you all have the resources to look abroad. You're looking at a global, or at least a European ski industry, and a lot of innovation happens there. And I just think of the way they take care of, the construction companies and the workers who come in and build something. I don't think every contractor drives a big truck to get into one of the European resorts or even the cities there.
Yeah.
And I'm wondering if there are any innovative solutions around, consolidating the tools that people need to do their jobs on site or in the community, so you're not having to haul it back and forth every day.
It's an interesting idea.
We've done a little of that. Last year, when we were building the Elk Camp chairlift at Snowmass, we actually fashioned with Leitner Palma an on-site batch concrete processing plant. So it took, I think the number was around 185 concrete trucks from the road.
Right.
Because we had the potash there, we had the sand in the mix, and mixed it on site, and then poured the forms.
You guys are going
and
to do it for the airport too, aren't you?
Oh, yeah.
So those are I think some of the, maybe an example of some of the things that you're talking about. I mean, I think the European model is, I've always marveled with their engineering and their forethought to think about more than the thing they're building, right? And I think that's a little bit of the element that we need to lean into. Dave and I did a trip to Europe 2 summers ago. I'm actually leaving in another week and a half to go look at these things and get inspiration in a way that I don't know that we have full control of. Europe has different regulations around how depreciation works when you're building an asset like a chairlift, and it incentivizes things like building quickly and putting a lot of money into things, and certainly with some grants and other sponsorship, they get a lot done because of the way that their governments are set up. And I'm certainly not here suggesting that Pitkin County come out and figure out a immediate depreciation schedule for us so that we can write that down immediately. But that's a little bit of what you see in those European communities that accelerates growth.
Direct EU support for a lot of the European ski resorts. They're liberally given to drive tourism. They're given funds from the EU to build some of the infrastructure. We're not asking for that. Don't worry. I don't.
But the inspiration can drive solutions on traffic and congestion, and it can drive solutions on connections that make sense so that we can take cars off the road and many other things. And so I think it's an inspirational play.
I want to jump on something that's been floating out there recently, just around one of the levers here. We're not trying to grow visitation; we're trying to stabilize it. But one of the levers that help us deal with this reinvestment loop and the capital intensity is to have more engagement on our mountains, more innovation on our mountains that allows the guests that come there to spend more money on the mountains, ultimately. And anything that starts to put that at risk, and we obviously are going to take care of every environmental thing and uphold with every code, but anything that puts that at risk hurts our business, right? And so there have been some winds blowing out there about trying to collar our on-mountain innovation a little bit and whatnot, and we just want to call that as a risk. Like what?
Just an example of what that would be.
I believe there's some drafts of some comp plan language that are starting to push up against that we would love to talk to you guys maybe more about later, but that would be an example.
I'd welcome the conversation. I appreciate, it's a tough spot. I've noticed this year in particular, during this winter, I saw more people that were in town, and I couldn't figure out why, because they weren't skiers, they weren't here to ski, yet they were in town, they're spending money, they're attracted to the place for reasons that didn't involve skiing. And it was baffling to me.
Yeah, we see it more and more too.
And you're seeing it also. And if you're not making money off of them here, then it's not helping your business at all.
Yeah.
But I keep wondering, is it sustainable? What is it about coming here right now that doesn't involve skiing? And that's so new to
Some
me.
of the Instagram culture, and people see restaurants and events and shopping, and it's becoming that.
A lot of people had never seen snow because I spend a lot of time in town wandering around, listening to conversations. And they'd never seen snow, so ride up the gondola and have lunch at the top was strongly encouraged for those folks. I remember telling many of them how to do it, and they're like, we can ride up there. I'm like, yeah, you can see the snow, and you can get out there, and you can have lunch. They were ecstatic.
Yeah.
And they were shopping like crazy.
Dave, I want to go back to your slide, though. I think what's missing, in my mind, and from this seat, I'll give an example. I would use the word urgency. I think it's something that's missing. At this board table, we saw it takes 5-6 months to go from this board to the governor's signature. So that's policy, right? And then it takes another 1 to 3 years to enact that through committees, whatever else. So government's got its own pace.
Yeah.
The other thing that's missing, I think, you said you're not here to ask for funding, but I don't believe that the state's helping. And you pointed that the EU's, at the ready to build. I think the state has thrown out the carrots through Prop 123. We met yesterday for hours to talk about housing needs assessment, but I think we'll bring down, very little money to this community, even though we have a demonstrated need and not perceived, but an actual gap in affordable units. So there's nothing on this slide I would say I don't agree with, or I'd prioritize one or the other. I believe that we live in a ski community.
Thank you.
I'm heartened by and sort of stressed over the second homeowner / industry that's been built around the painter, the dry cleaner. That everything is the last mile is actually delivered to each of these homes 20 times a day, much like it's going once to the hotel.
Yeah.
And so I know Michael Miracle's, been pounding that into everyone for years. We live it every day. We all commute into town. I hope as partners that we come up with an innovative solution in through both the airport development and in transportation. I would say the other stress at this board table is the overall funding, both of the airport and transportation systems. So yeah, aspirationally, you guys are rock stars. You've built, I think, 3 chairs in 3 years, maybe 2 in a rope.
Yeah.
And so, but that's magical, right? Because you've transformed parts of the mountain in a season. And So-
Build on a few points. Urgency,
please.
thank you. We agree. That's why we're doing everything we can, and that's why we've done all the stuff internally and have been heads down to get ourselves in the right spot to do that. On the government funding thing, there are some conversations around some of this gondola stuff where there might be CDOT funding potentially for pieces of that. Which is to keep an eye on. And then on the Intermountain infrastructure, I think one of the things Jeff and I, and this isn't a criticism of the past, it's just, new sets of eyes come in. We did a comprehensive evaluation of the state of the infrastructure across our mountains and realized we were behind on lift pacing. We were behind on, even some of the, locker rooms and facilities for our teams and whatnot. We got the Crowns to commit to a several $100 million incremental investment to accelerate some of the stuff you're talking, including some of the employee housing. So, we're working at it from all angles. And once again, our intent here and with the other bodies we've been with and will continue to be with is to engage in a dialogue and put some urgency behind this as a community and be forthright. It's, part of what we feel sometimes, and I'm not crying into my beer, but part of what we feel sometimes that people go, oh, the ski company's fine. They're owned by a bunch of billionaires and they've got endless money. Billionaires have stakeholders too, right? And they have constituencies too that, people look at a set of assets and go, well, why, if the returns aren't there, would we put more cash into that, right? It's not, and while they are as philanthropic as they come, and the reason I'm sitting at this table is because they are the best owners in the world. I could have run a public company. I have run private equity owned companies before. They're not going anywhere, but you can feel that pressure. And when you trend out 10 and 15 years, that's how long it takes to solve some of these things. That's why we're having the conversation.
Can I ask about the housing proposal for Snowmass up by the Divide? What's that, shop?
Shop. Yeah. Yep.
Yeah. Where is that now?
So let's just set the context. We own the land. It's a vehicle maintenance facility already. It is already has housing on there. It is entitled to have housing on there. We came in with units up at 40. We have so far had significant resistance from the Divide HOA, frankly hiring out-of-town lawyers to sit there and fight us. We're working, trying to come to a compromise with them, and the process continues. We need a supermajority of the Snowmass Council to get it through.
On the over by campground, down below at campground?
Yeah.
Yeah, I've been to that building when we used to deliver meat to them.
Yeah, but it's an application before Snowmass I'm not sure how much.
No, that's not,
To be
you guys
careful.
can do nothing about that, right?
No,
We're
but I
not-
just mean we have to be careful discussing it.
Yeah. I mean, but there's nothing that we just said that wasn't public and whatnot. And so.
Working on it.
And we can't, obviously.
Can I add something about housing? When we got the housing property tax passed, one of the emphasis we made was on partnerships.
Yep.
And I think we have some great opportunities coming forward. And I have a feeling we already have you kind of semi-looped in and hopefully more looped in as we move forward with one of our housing projects we're looking at.
Yeah,
I think
and
it's a great opportunity.
We are willing and not only willing, eager to partner and support. We have, to Greg's point, we have capabilities. Like we've got real teams, and you guys have met Heather Henry and some others on our teams. We've got development capabilities. We know how to do this. We know how to partner both with other entities who need employee housing. We know how to partner with all the developers and construction companies. And we are more than happy to play that
And
role.
these would probably be units that you have an interest in, so I think that'd be great.
Yeah.
Well, even though this was pretty depressing overall.
It should be. We're talking about it. That's the good thing, right?
It's amazing that you're talking about it.
Yeah.
I just want to give you guys credit for that.
Thank you.
This is not the norm. And I also detect a note of hope and belief, which I'm sure is why you guys are in the positions you're in.
We're confident we're going to get this solved, but
And I share that with you, and I know you watched me to fight the Pandora battle, and the nostalgia I felt about, my history with the mountains and everybody else's. So even though I don't ski anymore, I really hope that you can sustain this, and I think it's really important for our valley and for the state of Colorado economically. I mean, if we didn't have Aspen, Colorado would be different.
Yeah.
But thank you for your work in this. Thank you so much for your transparency. It really is quite remarkable. And I've enjoyed this. I've enjoyed the thought that went into it, the ask of the community to work with you. I think that is a really smart approach, and I'll do what I can.
Thank you, Francie.
I'd love to just talk about if you have plans cooking regarding transit solutions in the Upper Valley, when will those be baked enough to really start sharing them?
So they're not our plans first. There is a group that is working on emerging gondola technologies and feasibility. That's a group of private citizens. I don't know when it's going to come full public, because the risk in when you go full public is the darts start flying and things get snuffed out before people even get the opportunity to paint a vision. Listen, this is a moonshot a little bit, but Jeff used to run Whistler. I don't place in Whistler. If you look at the unlock, just the simple peak to peak did up in Whistler's mountains and what it meant for traffic and ability to transit the mountain and for their the health of their business. And if you can imagine a world that you connect the top of our mountains with gondolas and you connect the valley floor with more capacity with gondola systems like you've seen over in Europe, these are common in Europe and South America, these are common solutions. It creates an entire circuit, imagine, of the ability to move people around. It gives a whole nother aspect to the Aspen as a journey. It's a cost-effective solution, and the obvious challenges are obvious, right? There's view plane challenges and whose potential plot of land a gondola cable goes over or whatnot. But the technology's there, the need is there. It would be a big unlock. So we can't control that group. It's a private citizens meeting. We are a contributor to that. But they're actually starting, I believe, to talk and coordinate with RAFTA as well and try to get into like RAFTA's planning, because that connectivity into that system obviously needs to happen as well.
Yeah,
So
we had some presentations on effective gondola systems at the Transportation
yeah.
Coalition. But I wanted to say that, if I could just add something.
Yeah.
I do think that the future of Aspen and what can make Aspen special is not, it has to get rid of the traffic shit.
Yeah. Yeah.
And so the whole downtown area is congested with cars. And so if we had a gondola system and we had ways of having more of the downtown, not just the plaza area, that doesn't have cars, that I think could make Aspen stand out.
There are also technology, agreed, and there's technologies where you could have gondola systems come to a point that then transfer into an autonomous vehicle, people moving system that goes through. Imagine, you've been to Zermatt, Switzerland, I assume. They don't have autonomous, but you could have that kind of system. Yeah, right?
We have the complication of state highway going through town. But
Yeah, I understand. Once again, it's a moonshot, but it's something that, the spirit of this place and the innovative nature of this place can actually try to take on, right? And maybe it won't work, but.
Well, and I think part of it for me is, I think a lot of it is the willingness to just be brave and go out and try for something better. And oftentimes the start of that is the hardest part. And the evolution of the thinking can move along the path as you're going through the work and studying things and talking about it openly, right? And I think that it's the bravery to say, hey, we need to change, otherwise people won't want to come here anymore, right? And I think that's the question that's up in front of us. Whereas it used to be we need to change because we want it to be like it used to be, or we don't want to change because we want it to be like it used to be. And I just don't think we're there. I don't think that we're going backwards. That average home price of $13 million isn't going to go back to 3, right? And so we're going to have to kind of come up with new ways to think about it and be brave enough to tackle the problems, however audacious they may seem.
Can we just get our airport built first?
Yes, and we're partners however you guys need it in that. We're helping work on the transportation solutions next year with your teams and others, and
You can do
anything
whatever
we can
you
do.
want next year, whatever you want.
Thanks, Patti.
Yes.
Closing comments. Kara,
Thank you.
Ted, do you want closing?
Well, no, I just had one question, just back on the staffing. Are you able to staff if you had the housing, or are you even running into issues just with staffing in general? I know there's like a push for reduced staffing at restaurants, and I know there's options for, maybe
Well,
there's,
let me
maybe
take
there's
it on. It isn't
technological
a put- like,
developments
so
that could-
let's talk about what we walked into. So the answer to your question short is, right now, we are able to staff, but it's right on the edge.
Yeah.
Right? But once again, we're looking 5-10 years ahead. The effort you're referring to, we undertook an effort over the last couple of years to look at across all of our functions, not just restaurants. How do we schedule? How do we staff? How many people are on what shift? What times do you open and close analytically? That had never been done. It's standard course in most businesses that you do that. And the reason we did that is a couple. First, every employee that we don't need to have on a mountain, we don't need housing for, and doesn't add congestion, right? Part of it also too is we were bringing a ton of people seasonally to the mountain every year and not actually utilizing them enough. We were get 25 hours on
When we
average.
started the project, the average full-time hourly per week was 25 hours a week.
Okay.
We now got that up to 33 hours a week, which actually makes for a better employee experience, because a lot of these employees were coming here and they're like, give us more work.
Yeah.
And so through that, we have taken out the need to have 250 seasonal employees every year. So if you look 3 years ago, we had 250 more coming, and we now have less. And our employee engagement scores are just as strong. Our our guest scores are just as strong.
It's seasonal workforce,
stuff.
right? So it's
Like
200
J1 or no?
And those that come from J1 plus, right? But it's 250 beds that you don't need to find.
Mm-hmm.
And like oftentimes as the season fluctuates, it's 250 people that you don't need to say, hey, like this is a slower period, we don't have enough hours for you. So we're giving the ones that we do hire better hours, making a second job not a requirement, and it helps with the housing front. But I think as we look at the retirement wave, that alone's not enough, and we've kind of gotten what we'll get out of that, and there's not another slug.
I think we have 600 people in our organization who've been with the organization more than 20 years. That just gives you a sense of the wave that's coming.
Yeah.
My daughter just
I
celebrated.
think you make it too
20th
easy
year
for
teaching.
certain departments. I don't say that to make any changes, but I mean, I agree, the year-round healthcare and all this the
Yeah,
package that
it's
you
a
offer for
double-edged
people
sword,
who
right?
are working just for the winter. But I mean, it's good to hear about the staffing. I feel like it's unfortunate that they come and go, or they're J1s, because I feel like we kind of hollow out the younger generation here, of which I still identify with as I pulled to town. There's like fewer people who come here and put down roots. They come here, the J1 expires, they leave, and that's where like the demographic time bomb is.
Well, and I think that first year or two experience is important. And
Yeah.
so if you're, commuting for 90 minutes each way, like you might choose, your roots might not be here, where back, in the day they were.
Right.
And I think that's part of this kind of overall, as the puzzle fits together.
Yeah, no, I'm good. Thank you.
Good. Kara, closing comments.
All I can say is I appreciate the partnership. Greg, to your question on some of the other piece, I think that at the staff level, it's just been a partnership with all three of these and many others. So thank you all both in many items across the community.
Thanks, Kara. Okay.
Good
to see
great.
you.
Thanks for coming.
Thank you, guys. We appreciate the time.
Food for thought.
Once again, thank you.
Great to see all of you.
And so, Mr. Tanner sleeps at night because he has a routine. He told me.
I've
'cause
walked
I
it through
asked-
my sleep routines.
I asked him the same question, how do you sleep tonight? He goes, well, this is what I do.
Military discipline serves you well later in life.
Yeah, it does.
Is the short story.
Thank you all.
Yeah, thanks for
Thank
coming.
you.
Good to see you.
Thank
Thank
you.
you.
Did you guys see the news?
Yeah, the fire.
No, the Senate passed the war restrictions on Iran.
Wow.
40, by 2 votes.
And there's a fire in Garfield, people are being evacuated.
Did you notice that
Where?
fire appeared to grow
Dry Creek.
almost triple in size in 10 minutes? I thought maybe it was just a bad assessment. They first reported it as 10 acres at 3:30, and at 3:45 they reported it at 28 acres. And I don't know. And they said it's growing fast, but I don't.
Dry Creek fire?
Yeah.
Good job.
Thank you.
Thank
Thank
you.
you.
The smoke in the valley, I'm assuming, is from the Utah
Utah.
fire?
Yeah. So we'll probably have more now.
4850 vote directs the president to remove U.S. armed forces from hostilities against Iran unless explicitly authorized by Congress.
Where's
I don't know where Dry Creek is. Does anybody else?
South of Rifle.
So
South of Rifle.
Future agendas?
future agendas. So just a heads up for the board. We've had a few questions around when the airport will be taking place, when Phillips will be taking place. They are 13th and 14th, but I think there's been at least one or two emergency ordinances will be added to tomorrow's agenda. So if I was a betting person, it probably is closer to 2 o'clock before either the airport or Phillips would start.
Well, Phillips won't start till the end of the day, and we've got
Sorry, 13
16.
and 14 is what I'm looking at. Yeah, and I think we've got a couple additions.
Phillips is on its item number 16. I thought we only had one addition that Jeanette notified us of today, which was the,
It's the,
with what county? Delta?
yeah, I believe so, yeah.
And it's, of course, due the next day.
So what is printed on your desk is also what's been published, so there's 16 items.
This one's old on our, here.
Doesn't it have it? Oh, it doesn't. Okay, we'll get the new one. I was looking at too many items. But yes, the only item I'm aware of being added has already been added, I believe, Jeanette.
It's online.
And it's been republished, correct. So I think, Jeffrey, to your point, Phillips is currently last. I think there have been questions about moving the airport item, which is
Number 15 on my agenda.
No, that's the Holy Cross.
Oh, the SD.
The SD, which is number 5, because you all will be taking public comment. Just clarification from the board if you're moving it or keeping it at the same time.
The problem I have is it's already been noticed, and people will show up at noon thinking it's going to happen. If we say it's not going to happen till 5 o'clock, people are not going to be happy, and they may choose to not be happy. I think changing it less than 24 hours ahead of time is really tough on the people who are looking at our agendas and planning to be here. As long as we have one at the end of the day, we might as well do one at the beginning, I think.
So,
I think it's gonna be 5. I mean, some of these things are gonna go fast.
so I'm hearing the
We
board.
always say that.
I'm hearing the board is looking. I'm hearing the board is looking to leave. The red light is on. I'm hearing that the board is looking to leave the airport at number 5, currently number 5.
I'd rather space out the long ones and
Yeah.
have a little.
Great.
I have some agenda items.
Please.
On July 15th, our airport shovel celebration was not noticed in this packet, the future agendas, but it's noticed now, I believe.
Yep.
Okay. And then Tuesday, the 28th of July, is an ACRA meeting. I give the schedule to Sam at the beginning of the year so we can make sure it's on those, so we don't schedule exec until later in the morning. They never get put on the agenda, so she's got the list. And then I'm going to be out of town, as Jeffrey is, from the 16th of July to the 20th. Hopefully we'll be back in time for the work session on the 21st, because the 82 access plan is being brought back. And I want to be here for that, since I was here for the one before and the one before and the one before. So, and it says do not move. So I'm hoping to be back for that if we, how flying can be, especially coming from New Orleans. And then I'm going to be out August 7th through the 11th. Thank you.
I have River District meetings, the 21st and 22nd of July. I'll probably be able to make the regular meeting at noon by Zoom.
So you'll miss the access plan meeting on the 21st?
What is it again?
It's the access plan for Highway 82, the access that's
I will
specific.
miss that.
So we'll need to,
Keep an eye on it, because if
If
Jeffrey
you-
and I
yeah,
get stuck,
we'll-
you won't have a quorum.
yeah, okay. We'll connect with Amy on when I'll get with Amy with more.
We'll call you as soon as we know we're stuck.
I think you're supposed to fly in early, that's what we heard.
You can only do so much when it comes to flying.
Anything else future agendas?
Only tomorrow, I have a family medical issue that may require me to leave for Denver probably around 5 p.m. tomorrow. And it looks like that would take me out earlier before the day is over. Just
So you
warning
may
you.
not be here for Phillips?
I may not be here for Phillips. And I'll see if I can delay that. Originally, they wanted me to leave earlier in the morning, and we pushed it to the end of the day, but I don't know how much farther than 5 I can push it. But I'll let you know tomorrow.
What time do we think tomorrow would wrap up?
9 o'clock.
I don't know, we move pretty quickly lately. There's a lot here that
6:30?
we can,
I don't know if people will be.
Never
there
been
for
here
the
that
report
late.
At this point.
Anything else?
6?
Before
Don't-
6.
Yeah, okay, cool.
Anything else future agendas?
2 other items. I think there's a question about who I want to confirm numbers for the airport visit with Thorn Partners on the 8th, just because we need to know numbers for escorts. So, Greg, I know that you are out, I believe, on the 8th, July 8th,
yes, I am.
because we're doing it in the morning.
I thought we were doing it on the 7th.
We're doing Maroon Bells on the 7th.
Okay.
Airport is on
I
the
already told Amy I would be there for the airport, so, but just make sure I'm added in there. And
Okay.
I'm doing Maroon Bells also.
Okay.
And that's on, could you tell me about that again?
Yes, I can walk through the schedule. So the 7th, we will do a mini retreat here. Lunch will be provided. Then we will leave. I believe all of you, but please let me know, have confirmed that then we will do a site visit to the Maroon Bells with them in the afternoon. And then on the morning of the 8th, before your regular meeting, we would be doing an airport visit with.
In the morning on the 8th before
It's like at 8:30 in the morning.
Yeah, it's like 8:30 in the morning to do an airport visit. So
8:30. So is that
and-
gonna populate our calendar at some point?
yeah, we'll get those.
And then we have a regular meeting following, so it's gonna be a
We
long
might
day.
have to
Yeah.
do something about agenda review.
So I think I just want to confirm, other than Greg, all 4 of you will be at the airport visit for now. You can.
Okay.
Okay, great. So we just need to know numbers for.
And then we have, after the shovel thing, we go to Woody Creek Raceway.
Yes, so then the question I have, right now we are planning, I believe the groundbreaking on the 15th is 10 to 11:30
At the airport,
at the airport the following week
15th, 10 to.
Owl
when?
Creek side.
at the Owl Creek side AOC. And so then you all have a site visit, so I think the question is, we can pull together if you all would want a lunch at Jaffe Park, since I know you'll have a full day, if you all would be interested, or if you want to be on your own and just meet up at the.
Well, we're gonna be
restaurant.
carpooling, I would imagine, so we might as well have lunch provided. so
We're
we
going
can-
to the raceway after, is that the raceway visit?
Yep, yep,
What's the date on that again? Sorry.
it's the 15th.
The 15th, after we do the shovel-ready project, doing dirt around.
Just
We
the
can
dirt
stop
towing
at
pro-
Jaffe and have lunch and then head up to the raceway in Woody Creek.
That's kind of what we were tentatively planning.
So where are you thinking we would have lunch?
Just do it like at Jaffe Park.
Jaffe
Oh, you mean a
Park-
picnic?
Yeah, a picnic.
Oh, I'm trying to picture a restaurant
Oh.
called Jack.
Haven't you seen the new restaurant we put in on that
I didn't
open
know you
space
heard
parking
that.
lot?
Just kidding.
It's right next to the outhouse that's provided by the Rafters.
Okay, whatever you say, Kara.
Okay.
Or we can
Whatever
go to
you say.
Stein Park and look at the new bridge.
Okay, we will get you all around the 7th and the 8th and the 15th.
And when are we going to, Snowmass Falls?
We aren't.
We don't have one scheduled.
Oh, we're not doing Snowmass Falls?
Mm-mm. With the lobbyists?
Been there.
I thought I just got something from Amy asking me about the. Okay, I'll look for it. Move on. Don't just ignore
Okay.
me.
Okay.
And the location and extent was approved, moved forward by planning and zoning.
Mm-hmm.
Oh, Maroon Bells is what I was thinking of, yeah.
That is my future agenda list.
Excellent. Anything else, future agendas? Seeing none, department updates. Patty Clapper.
Okay, ACRA. Food and wine was awesome. Weather was gorgeous, a little windy on Saturday afternoon. Things were blowing like crazy. But people seemed happy. People were excited. Lots of activity in the downtown core. It was great. And they are coming back. Food and wine will be coming back next year, which is great. NACO. Jeffrey and I will be going to the annual conference. I did submit the policy. Ryan and I figured out how to cut and paste it and send it in. We were a week ahead of schedule. They were shocked that we were so organized. So I'll be presenting that at the NACO convention in July. And I don't know, Jeffrey and I will be splitting up probably public lands, human health services, whatever other issues may be coming forward. Northwest COG, we have a retreat coming up. Not until August. We're going to do it at the Hoffman. I'll let you guys know if anybody wants to stop by. It's on a Thursday, and then I got to get out of here to get to Denver to catch a plane. But I'll keep you guys posted on that. And we're trying to evaluate with NACO the Economic Development District because federal funding we have not been awarded yet. We're told we're going to get more than last year. Then we're told we're getting none. So we are just kind of limping along because we don't have a director of the Economic Development District right now, so we're hanging in there just waiting. We're not going to put in effort about hiring somebody or reconfiguring the program till we know if we have any money to continue the program. So that's where that stands. The Intermountain TPR, I need to sit down with Scott Mattias. I haven't done that. I just realized we need to sit down and figure out what he's going to do as far as participation, because it's usually he and Linda. It was Brian and Linda.
And I think sit down with Scott. I think there's a conversation with Scott and Andrew and whoever the vice chair was. They were gonna kind of get together.
Yeah.
So
So once we figure that out, we'll figure out when the next meetings are, because usually Brian and I would talk before the meetings and after, and he did a great job. Brian did of chairing those meetings, and the jail thing we're still waiting to hear. Thank you.
Commissioner Jacober.
Well, I don't really have much. The Water District, I am in the Water Supply Project Committee, and we are still working on using some of the water that we being the River District, own at Wolford and can't remember the other place, and trying to get that down to growers in the Yampa area and down in Grand County and Mesa County for when they need it. And so somebody is helping us fund some of that, and some of it's just it's sort of a lease arrangement, so it's not very expensive, the water that we're trying to get down to them. And then there's the Green Mountain Reservoir that has the historical use rights that a lot of people are not being able to use, including part of Pitkin County. And so they're working on making up for that, and one of them is in the Roaring Fork, making a deal with Rudai and then some other things. So really what we're talking about is funding these supplies down to other people who need them. We meet on Thursdays at noon every week right now.
So can I add real quick, Francie? Just so you know, with QQ, I don't know who's our QQ reps now. So water issues, though, Northwest COG did pass, it had to come back to Northwest COG to the executive committee to pass a sedimentation issue for Grand Lake. One of those. Oh, there's three lakes there. There's 3 lakes there. Grand Lake.
Shadow.
There's that little guy that.
Granby.
Yeah, and there's a sedimentation issue, and I think it's Shadow Mountain gets dumped into. So we just extended their agreement to monitor, because I think it's Front Range Water, Denver Water, maybe. to keep the water clean to ship it over, but I just wanted to tack that and you
Yeah.
reminded me.
Yeah, it's a weird thing where they take the water from one and put it in Shadow Mountain and then they bring it over.
Yeah,
to
and there's
Derby to go over.
sedimentation was getting stirred up for the transfer of the water and, yeah.
And
Thank
looking
you.
at my other things, I don't really have anything else. There was a really interesting notice put out by CPW about a bear attack. I forget where it was, Adams County or something. Anyway, it had a whole list of things to do and not do if you encounter a bear. So I suggest everybody look at it and read it. It's on the CPW website. It's very interesting. It had things on it that, I mean, I've lived in bear country most of my life that I'd never heard before. So I think they're maybe have updated a little bit how you're supposed to respond if you encounter a bear. It was very interesting.
Can we get our community backcountry, somebody, the copy of that and have them, so they have it handy to give to people? The city should be passing that out. That'd be great.
Yeah, let me check in with CPW and see if we can get that out.
And
It could
CPW
be on our website for that matter because
That'd be great.
there's going to be bear
If
activity.
you get it, Francie, just forward it to me and we'll get it in the right
Okay.
folks' hands.
Okay. That's it. I did have lunch with some of the Transportation Coalition, but recently, but there isn't really anything to report. We just sort of talked about what's next. And
So CPW did appoint their new members, correct? To their
Say that again?
CPW did appoint their new commissioners?
I don't know if they've appointed I forgot to ask Ty.
Yeah, I think they
I
did.
know that John Emmerich and the other person did not get confirmed. And I heard about the other two applicants, but I
think we-
haven't heard whether they were appointed. Have you heard?
I think we won, and one was a woman who comes with great background.
I'll look
yeah.
it up while
Yeah.
other people talk.
Commissioner Mann.
My turn. APCHA meeting last week, and Jeffrey, you can fill in as well, but we had a talk with, was it Andy Fisher from Roaring Fork Fire Rescue on HOA wildfire assessments, and it was a good Q&A for the whole board. And Jeffrey kind of did a little homework on that afterwards as to what the county can offer APCHA HOAs. It does turn out that you can cut down trees if it's in the interest of wildfire mitigation. You don't need you need a permit, but there's no fee. That's probably good for the larger APCHA community to know. And you also need someone there who is well-versed in
Knows
wildfire
how to cut down a
mitigation.
tree.
You can't just go cut all your trees down, but you are allowed to do that without a fee, so that shouldn't hinder HOAs from doing that. County does not offer chipping services anymore.
And CSU has a guide for what you can plant in that defensible space that is ignition resistant.
Okay.
Yeah.
That would be good, because we're actually doing that at our own HOA, CSU.
Yeah, it's great information. I think the fire department might still have copies of it.
Okay, and then there was just a little update on affidavit compliance results, which was a brief discussion. We're going to hear more about it in October. There were some near 24 notices of violation sent out, and 3 of them did not get sorted, and those folks have moved out of their units, and the others all did come into compliance. It was a little light on the data. We're going to hear more about that in a more built-out report this fall. And then one other bit of news is that Peter Granny, one of the board members, did choose to step down from the board. And I believe Jackie Matthews is an alternate who would be in line to fill in as a voting member. So there may be an opening for applicants for an APCHA alternate member coming up.
So we should approve if she gets moved to a full-time.
Well, I guess that's the discussion.
Right.
So Charlotte is aware, she's working with APCHA, so Peter was your joint appointee. So there's 2 from the city, 2 appointees from the city, 2 appointees from the county, and 1 joint appointee, and Peter was in that joint. So I think Charlotte was talking with Jackie and will be coming forward to the board to debate about, or to discuss further.
We're going to put it
If
out
you're
to
gonna
ad.
put
We
it-
have to put it out to ad for the alternate
Yeah.
replacement.
Yeah. So
But
should I-
also, whether or not we want the alternate to move up.
Yeah, yeah.
Is what I'm trying to get to, yeah.
Charlotte will be coming forward with kind
Okay.
of that discussion point.
It's
and
confusing.
Coordinating with the city who's going first,
Right.
and right, it always takes some coordination efforts with filling that vacancy.
So that was APCHA. And just looking here, having had the conversation with the ski company folks, I wondered if, and I don't know how far CCI's purview would go, but on the topic of support, and you were mentioning statewide level support, if that was something that, maybe this is more of a CAST thing, but is there anything there to explore in terms of state support, whatever support might be for, whether it's depreciation or taxes or enterprise zone or something to help with ski areas in general? I didn't know. It seemed like it was a lot for the county. I didn't know if it was a thing for the state, but.
I have no idea what any of that would mean.
Well, like, is there any, right, is it something worth ever exploring? Is there any sort of incentives out there at a state level? Because Colorado ski country is so proud of what we have here to offer support. And I'm not sure what that would look like.
I have no idea.
No, nor do I. But I mean, I don't know if that would be something just worth exploring.
Levi's nodding.
Yeah. And I would suggest, I think, if
He's thinking.
it is something, your best avenue is going to be through CAST.
Through CAST, okay.
Yeah.
I would just throw out that there is, the existing Front Range economic development, sort of from a census standpoint, is called an MPO, is a Metropolitan Planning Organization. So there is a notion of concentrated development. Like, so could you come up with the analogous Western Slope mountain town that would be an economic development zone? So I think it's worth exploring. And
Yeah, it was just a thought I had when we were listening to them, and I didn't want to bring it up.
It goes back to the question I asked. Like,
Yeah.
there's really no state support for anything we're doing.
Right.
And so we're doing all these assessments, and yet there's pretty much lack of funding based on the PowerPoint that we're paying to develop.
Yeah, DRCOG is an MPO. DRCOG is the big cog on the Front Range.
Yeah.
They get a lot of federal funding. There are very few, if any, rural planning, and you have to have a certain population, et cetera. And it's a big hoop to jump through. It's another level.
Okay.
And the funding for that is even being cut back.
Okay.
I mean, I think you and I were in the meeting.
A lot
Sorry.
of it's transportation.
You good?
I'm good, yeah, I'm good. Yeah.
I've got the commissioners if you want it.
Please.
Oh, yeah.
Okay, so the first one is Rebecca Nemiak, and she's an associate professor at the Department of Human Dimensions of Natural Resources at CSU. She's director of the Human Animal Policy something. She's got a lot of wildlife experience. She served in the Colorado Department of Agriculture. The next one is John Lecoq. He's a professional photographer, founder of the outdoor gear company Case Logic and Fish Pond, and owns the 400-acre Otter Creek Ranch near Silverthorne. He sits on multiple conservation boards, and it lists a bunch. And then Peter McGuire is a board-certified veterinary neurologist, founder of Specialty Vet Care in Grand Junction, and an active hunter and angler appointed to represent the sporting community on the commission.
I think that's great.
So
Thanks, Francie.
they'll have to go through confirmation January, maybe December. But they serve for a while and then they get confirmed.
Yeah, that's
It'll be January
interesting.
when the legislature's in session, I'm sure.
Any other updates?
No other updates.
Commissioner Postman.
Sure. Board of Health, the next meeting is on the 16th. And we'll have our annual Board of Health training, if anybody's interested, for Board of Health members. Required statutory training every year, which will take about 45 minutes. And we'll have a state public health person conducting that with us. After that, let's see, anything else? Just there'll be a report on Lincoln Creek. We'll be working on strategic planning with our new behavioral health lead, behavioral health strategic plan, Lindsay Branham, who you may or may not know. She's new to the county. Ashley's going to come and present. This is just the 16th upcoming because it's been 3 months since we met, and I think I've already reported on Board of Health. So that's pretty much it from Board of Health. It'll be interesting this time around. I'm going to switch to RAFTA, and lots happening with RAFTA. And Francie can chime in if there's something in there. Let me just see. There was a conversation at the end of the RAFTA board recently. We've got 11 new electric buses trickling in. In fact, I ran into one of them in at the charger by Lowe's in Glenwood. I saw a RAFTA bus trying to back into the public EV chargers.
Oh my gosh.
And this guy was, I'm thinking, what is he doing? And I got out and said, hi, what are you up to? And he goes, oh yeah, I'm just looking for a place to charge. And I thought, well, this bus, what's the deal? And he was the guy delivering the bus, but driving it over the road from California.
Really?
And he didn't know how to get to RAFTA headquarters.
And
so he was just
using a little tiny car charger thing?
Well, it's the level 3 charger. It's a supercharger, down there.
Wow.
But they charge on stuff like that.
How interesting.
He's
So
a
he was
block
just
away from
getting enough.
RAFTA.
He was basically a block from RAFTA, and apparently he was coming in. It was on a weekend, and it's whenever they arrive, they
sent
arrive.
him to Lowe's.
And so anyway, so somebody sent him over there. And so we had a conversation. Somebody said, well, what happens when they run out of electricity? And I thought, well, just kind of like what happens when a bus runs out of gas. It's an issue. But we did talk about, and I sent the board, my vice chair, and then and others on the board, this whole emerging thing with electric vehicles, cars and buses are being used as batteries. They're mobile microgrid batteries that can charge. They could keep an emergency room open for a night, a bus could. Or, there's an article, been sharing that sort of thing. What else? The biggest issue is how are we going to fund the hogback? What's RAFTA's responsibility? We're doing everything we can to fund the hogback service from the lower part of the Colorado River Valley to Glenwood. Garfield County has said they will not put any money into it. The communities down in that lower part of the valley are interested, but they're good for maybe $50,000 a year, and we need millions in order to make their hogback service work. It's about 55% of their ridership actually stopped their trip in Glenwood. So it's not that they're all coming up to our end of the valley, but RAFTA sees a need in maintaining service any way we can. So we're looking at trying to extend it as far as we can. Right now it ends, just at the beginning of the next winter. But we're working on ways to keep it going for years or seasons longer, at least. We had another presentation on the e-bike situation. I and Rachel both have raised a lot of, the subject of e-bikes on the bike paths being a hazard with the different velocities. And so now we've got a coalition, and Francie's been part of this conversation also over the last couple of meetings, where a group is forming to help develop a comprehensive and standardized plan for handling high-velocity vehicles on the bike paths. New policies coming, sidewalks, all that, yeah. There are some state laws that are changing, and laws down on the Front Range we're looking at. We're just trying to make the roads safer and to inform parents that the bike they bought their kids could be actually extremely dangerous, because some of these things go 50 miles an hour, and you can't ride them on a bike path. So that conversation has been continuing with RAFTA. We have some new board members. Garfield County is coming. They are a non-voting member, so that at least Tom Jankowski's been at the RAFTA board table 2 or 3 times in recent meetings, which is a first in 22 years. It's the first time in 22 years that they have actually come to a meeting. And then also Alicia Gressley from, I think she's Rifletown Council, is deeply involved in transportation work down there, trying to sort things out, and she is now joining us, as is, I think, the mayor pro tem of Newcastle or Silt. I apologize, I just dropped where he was from. So anyway, RAFT is expanding necessarily because that's where the workers are living, and they need to get here, or get to Glenwood in that case. I don't think I have anything else from RAFTA. Let me switch over to, what else do I do? Root Eye Water and Power. Root Eye Water and Power, I've just emailed you all through Amy the ad campaigns. We've got social media ads with some attractive looking images for water conservation. We've done 3 radio spots with Andre Willie from Healthy Rivers and Streams, from Aaron Zielinski, the Mayor Pro Tem of Glenwood, and me doing radio spots that are running on not KD&K, KJAX, but all the other commercial stations are, several of those are running these ads, just about, reducing water use this summer and trying to pay attention to that. RWAPA has been so busy, and our new director, Paula Stepp, has taken over from April Long, and she's knowledgeable and experienced and hardworking, and she's been done so much just to get up to speed since April left that I think we're actually going to reduce her hours in the next several months because she's a half-time salary working a full-time, so we're going to use the second half of the year to ramp her back so we stay on budget. But it's been with the drought and the fire danger, she's been working overtime, and so I expect to hear less from her.
Well, she doesn't work by
this
the
fall.
hour. She doesn't get paid by the hour.
Yeah, but she's using up her, we keep track.
For goodwill.
Yeah, so it's not a full-time job, it's a half-time job. And so she's been doing a lot with aquatic nuisance species, with fire mitigation, with water allocation, as you'd expect in this odd year. So we're not intending to come back and look for more money from all of our partners. What we're going to try to do is just scale her back a bit later in the fall when there's less to do. That's the news from RWAPA, RAFTA, and Board of Health. Thank you.
Cool. Following up on Ted's APCHA report, I think there should be in your inbox 7 points or so that was discovery from reaching out to both Road and Bridge and to community development regarding tree removal, as well as chipping, as well as hand tools, what we can do even though we're about to go into stage 2, what people could still do around fire mitigation. So I sort of generalized it from the board, but it was sort of the fact finding from Scott Mattice and from Tyler Carville, and just some other opportunities. I'm getting a lot of questions regarding road maintenance, if you will, and people worrying about egress with stage 1 and stage 2 fire restrictions.
Can I ask a question about
Please.
the rules, regarding fire mitigation? Taking down trees is something we're concerned about. Is the city pretty much doing the same thing? If somebody has a hazardous tree on their property in the city, they're not playing by the same rules as we are, as I would assume.
I can't speak. So we had Aspen Fire, it was Andy from Aspen Fire, and I think the city, and I can't speak for the city, but I can give a generalization of, I think if you have a licensed professional who says this tree must be removed, you're still having a conversation with the city about the removal of that tree, if that helps.
So the city has to
In other
approve
words,
a permit.
In other words, if
Either
it
way.
was if it was outside of, let's say, the 5 feet and it was at your property line, that's not a risk to the structure. You're going to pay for removal of that tree in the city.
City has to come over to your house and inspect, and you have to have an arborist look at it also.
Right. And the fire department perhaps as well. if they're-
So my email is to say, actually, there's a bunch of solutions potentially depending on the site. I offered them, for example, to Snowmass Creek Road, who said, look, there's a bunch of down cottonwoods along Snowmass Creek Road. It's your responsibility. I said, actually, it's the private homeowners. We can come out now. There's a new company in town, or new nonprofit called Resilience Force, that would actually do hand tools and do some removal.
Is that Hadeen?
It is Molly, her name is, and
okay.
it started out of New Orleans.
Okay.
And it's just started up, and Resiliency Force is using indigent, homeless, and looking at other areas of workforce that are looking for work. It's all paid work.
Right.
And Workforce is
That's that
basically
group, yeah.
training them. They were training actually out at the Farm Collaborative.
Right.
And
Yeah,
so
I heard about
working
that.
on hand tools. CCI, Carrie Warren Gully reached out to Pitkin County and is looking for someone to sit on. There was a bill called HB 261317. It is the workforce bill started by the governor. and potentially there's impacts from HR1 and SNAP reductions that's going to impact the workforce in rural Colorado. And so they're looking for someone to stand up and sit on this board for the next couple of years. And so they looked at Matt Schur and looked at myself. And so I'm at least having the conversation. We do not have a workforce center. The workforce center in Pitkin County is in Garfield County.
What is a workforce center?
Workforce center is so let's say I lost my job tomorrow, I'm no longer a commissioner, I need to go find unemployment benefits or go look for a job. It's a workforce center. So it's
That's what it's called, workforce center?
It's at the unemployment office.
Oh, thank you.
Yeah.
Thank you.
And so I'm monitoring it. I'm going to the calls. I don't know if it's something that the board wants a commissioner on, but there's an opportunity for rural representation on the unemployment center.
We used to have a workforce board here. I sat it with Tom Jankowski. It was funded by the state. You met every month or so by Zoom, and you talked about unemployment statistics, employment job opportunities, education, et cetera, and then the state withdrew their funding and consolidated, and that
Do you
happened.
think we should have somebody on that?
I think Garfield County does. When you look at the statistics now and who's generating the employees, it's really not Pitkin County. But people have been accessing it in Glenwood Springs for years.
So I'm not jumping up and down. It was an honor to be asked by Arapahoe to join the rural side of it, and I'm monitoring it given the impacts of HR1 and SNAP cuts. So it sort of felt like a little bit of my human services role at a CCI.
It's fine with me if you do it. I don't object.
Yeah.
I don't know
I don't know
how it
you
connects
need
to
another thing to do with
SNAP.
that.
And I would also say at the end of the day, in terms of rural representation, it probably should be Garfield,
Yeah.
given that's where the center is. So they have more experience with it.
Maybe one of their new county
and so-
commissioners, which would probably
So,
be somebody who would be interested in that.
At open discussion, we will talk about wildfire technology, so I'll leave that. We have a meeting with CCAT on Thursday, but I'll leave that for open discussion.
Today, it's,
This
I'm
was
just looking at the
scheduled for
clock.
10 minutes. So, and then just circling back to the conversation around funding, one of the things we heard at CCI was they have $15 million this year in funding rounds. They usually have 3 rounds of 25. So it's just like one more, there's not a lot of money circulating around in the system. I'm moving on to open discussion. If Levi could join us while I have the floor. On Thursday, there's a potential to introduce 3 county-led initiatives or 3 county-led propositions, preces, one of which is the real estate transfer fee. The second one is a wildfire technology bill. And the third one is
Mobile home park timeline extension.
that we discussed briefly yesterday, which was, why is it that we have 90 days to come back with money, but the state's always saying, well, we can't meet those timelines, right? When it's a state imposed, it's the 90 days is coming out of the state legislation around mobile home parks, but Prop 123 doesn't line up with the mobile home park
I
legislation.
think we've already decided we were going to support that, didn't we?
So
Can I clarify real quick? Sorry.
Please.
So are you talking about CCI items or something?
Yeah.
we're mixing metaphors. We're talking CCI. CCAT actually asked for legislation or 2627 outlines, drafts this Thursday. And so the immediate need is that I would love to have the support of this board. And I'll back up and say there's 2 bills that we've seen over the last couple of years. One was for the Wildfire Resiliency Code Board. This board then adopted the wildfire code for the state of Colorado. And the second one was a hail bill that this board supported. Those are both parcel level mitigation. We've not really done anything at the community level. And so the goal with a new potential legislation would be to look at community level hardening and look at the use of technology for that. And so it's taking, what we heard from CCI was we want we bills, not I bills, and bringing that forward in the 26-27 legislative session. There's a draft that we've prepared, but I would love Levi to work on that. And I would need this board support in bringing, sort of a Pitkin County-led wildfire technology bill through either CCI or CCAP, but we would float it first at
And what would
CCAP
it
this Thursday.
do? What would this bill do?
So it would set up similar to what we just did with the hail bill. It would set up likely an enterprise fund, and so it would find fees in the system to fund at $20 million a year, $100 million for 5 years, so we operate under Tabor. And
To do what?
it would provide monies for counties to acquire advanced technology.
Like Pano and stuff.
Like Pano.
Okay.
But
That's what I
trying
mean.
not to use a brand, trying to say, look,
right.
you know, there's a reason why Lee and Elk took place, and maybe we could have prevented those if Mesa, for example, had access to advanced technology. So I'm trying to keep it at that level and saying, here's the brand name, go out and buy Duracell.
So you want to propose something that will provide funding for that kind of technology in counties that don't have it? That's what you're talking about? Okay.
Yeah, and it could be paid for by the utility companies, so it could be the Holy Crosses and the Excels, if, you know, because they're one of the causes of wildfire. So early detection would prevent that wildfire and potentially reduce insurance costs in the state of Colorado. So it's moving from that parcel level to the community level with, you know, technology at the forefront.
I don't have a problem with it. My concern is the utility companies are gonna pass it on to the consumer. Jeffrey said they're not, but there's no guarantee, there's no plan,
What
there's no.
kind of consumer? What do you mean?
If you buy electricity from Holy Cross and they're being
Oh, I see.
charged to fund a $20 million a year program,
Well, it
So-
won't be us, because we already have it.
So we would work with.
no,
the-
you fund it statewide, whether you
yeah,
have it or
okay, I
not,
get
whether
you.
you get
Yeah.
it or not.
If the board pushes this forward, we would work with the Department of Insurance in how that framework would be set up. And it's very similar to what we just did with the Hale bill. So the Hale bill does have a 0.5% fee. And again, it was worked through Mike Conway, and the DOI were big supporters. And actually, the insurance industry came on board, you know, throughout the adoption of this bill.
But in talking with you earlier, there still is no plan as to how you ensure that the costs are not, you ask that you don't pass the costs along, but they don't know if they're gonna raise a fee over here, or, I have concerns, I'm just pointing that out. If we move it forward, I wanna make sure the consumers are already paying too much for their utilities. I don't want them to get hit again for higher insurance rates and higher utility rates.
Well, I'm okay with your proposing something like this. It would be great if we could help reduce insurance rates by another step in the right direction. You know,
I don't, well,
I
yeah.
don't know about where the cost will be. I don't know about charging the utility companies, because they don't start all the fires, but maybe as a,
It's already
doesn't
written
have to
legislation.
be decided at this point.
Yeah. And again, utility companies are already paying for some of this technology, and they're paying for some of this technology in Pitkin County today. So it's not, you know, Jeffrey's idea, it's like, we're already seeing Excel step up and say, we have transformers up the frying pan, we need cameras up there. And we, you know, because this way we can determine that it's not utility provider.
You've already drafted legislation, right?
We have a draft, we have a.
Who's we?
So we, Pitkin County, have a draft that we would bring to CCAT on Thursday to discuss. I'm looking for board support. We're moving into the 26-27 legislative
So
session.
we, Pitkin County, have already drafted legislation and.
We've drafted a an abstract, a
Uh,
concept.
So
We just now are learning that we
Yeah.
drafted legislation.
So let's take a step back. So I think this came out of the wildfire conference, correct? So coming out of the wildfire conference, Jeffrey has taken the lead on drafting some language in coordination with other partners from that conference, right? So I think the question before you today, as it relates to CCAT's deadline, is if the board would want to support the proposal to move that abstract forward. I would suggest that we can also circulate that to the board this afternoon, if the board is in support of moving that forward. I also believe that there, and Levi or others can jump in, that there's also more opportunities of refining it. And so if there's concerns about consumer protections or anything, we can put some of that language in prior to submission on Thursday.
So that gives us tonight and tomorrow.
Yeah.
I'm
So-
still threading through a packet that we're just adding to as we, but if you, it's fine. I just am concerned about the process. But it is what it is.
I'm okay with it.
Let's do it.
Yeah, let's move it forward. And next time, can we know a little bit more ahead of time that we're drafting legislation, so we have time to actually weigh into it? If we're gonna be moving it forward, I would really think that would be nice.
Is the board okay moving forward with both the RET fee and with the Prop 123 update to match current mobile home regulations?
I think we already had said yes on that.
Yes.
Awesome. Awesome. Any other potential legislation any individual commissioners would like to bring forward in the 26-27 state legislative session?
Well, I want to tell you about a phone call I had from somebody. It's not at the state level, I'm pretty sure, but it's from a friend of mine in New Mexico who said that she's learning that the U.S. legislature is considering rescinding roadless roads regulations in order to have access for firefighting and stuff like that. So kind of wondering what people know about that and where we stand with that and whether we should be doing something about that.
So,
know anything about it?
I can chime in real quick. So Colorado does have its own roadless rule, and we believe that we would still be protected by the existing state level protections from any change or rescission at the federal level.
And is there something that's happening at the federal level, or is it just an idea, or do you
No,
know?
there's a movement to rescind the roadless rule at the federal level, and so it's both. I think Colorado and Utah. There's two states that have state level protections that went into place, and my last correspondence on this conversation was with Brian Glaspell in the last week or two. So.
But I'm concerned about other states too,
Yeah.
not just Colorado,
Well,
so.
and does our state supersede what they do on federal lands? If the feds come in on federal lands and open it up, does our state regulation cover that?
I don't know.
I think this is also probably a good topic that we can flag for conversation with foreign partners too, to understand that dynamic between state and federal regulations.
I think they're moving it forward. My understanding at NACO is they're moving it forward under the guise of firefighting when it actually opens up to logging, oil and gas exploration.
I think that's it exactly.
That's exactly it.
Anything else? Levi, anything we missed? Oh, we had one more letter that was.
Here it is. Can I just
Please,
quickly add
please,
to
please.
This is AI. It says its Department of Agriculture is in the late stages of a rulemaking process to repeal the 2001 roadless area conservation rule on 45 million acres of national forests. And the agency is expected to finalize the repeal later in 2026. So I'm pretty sure we feel pretty strongly against that. And I don't know whether we could have any influence, maybe our delegation, contact our delegation about it.
I think drafting a letter, but I think also finding out if the state roadless protects us. I'm not sure, but I think that would be a point. If we're protected, you're right, Francie, what about the other states?
Yeah.
But if we're not protected, then we definitely need to be involved.
Okay.
So I think if we vet that out, whether our
State
state
exemptions, the proposed national repeal would not apply to Idaho and Colorado.
Sorry.
Which
So
are
then our
individualized
such Idaho.
state-specific roadless policies. But I don't know whether we want to make a statement anyway.
I think we probably should.
I think we should.
I think drafting a letter saying that we are concerned about, we don't have to be specific that we're protected, but it's just, we spent a long time vetting that
Yeah, no kidding.
that issue. We spent hours and hours of energy fighting for it. I'd hate to see it given up in any state.
60 million acres. Wow. Thank you.
It's funny, it's for wildfire too, when actually we know that the more roads there are, the more people get places.
Well,
where
that's the whole
fires
thing,
actually start.
yeah.
So it's kind of.
But you got helicopters for firefighting.
No, it's crazy that people actually buy into that narrative that.
And what's the first thing we
And
do
it
when
doesn't
we go
even
into
say
stage
anything.
2 is we restrict
And this says
vehicular
nothing
access
about
on
fire.
public lands.
This doesn't say anything about fire.
It just says repealing it.
So for Levi, it sounds, and for Kara, it sounds like we'd like to move forward as a board. I would consult with the U.S. Forest Service on any letter that does come out from the board before it goes to congressional delegates. Am I jumping too fast?
I don't know why we'd
Now it does say something about wildfire.
copy the Forest Service in on it, but they're gonna just be told from DC. Yeah.
We can check in with some of our partners and staff.
Yeah.
That's my request. I think that Supervisor Glassbell has a unique perspective. I actually think he was there and drafted some of this legislation, so I think he'd be a good advocate with us.
So we can draft and check with our partners and bring back kind of after that analysis.
And
when is that going forward? What's the
It's
date?
said by the end of 26, later in 2026. And, this is just AI in response to a search roadless rule repeal. It actually has a lot of information.
We can follow up with NACO too at their public lands meetings.
That'd be good.
So if we have a letter in hand, that would be great for NACO, which is not till the middle of July when we're going, the 15th.
I think Levi had one more. It was the pardon me letter.
Oh, that was just a draft. Greg, you had sent the editorial about state prosecution for crimes that were convicted and then pardoned at the federal level. So I just wrote the drafted.
I think that's still
request.
worth looking at.
I'm not interested in doing a letter about that. If the rest of the board wants to. Jeffy wants to
Is there a
sign it.
concern that it's wading into a place that you might get retribution?
I guess there always is. If we're against the roadless rule rescission, we could be doing the same.
But this particular one seemed to be more of a lightning rod, I think.
Pointed right at one person in Washington.
You know, when we're like still entertaining applying for federal grants on things, I don't know.
Right.
I mean, I think we all agree it's unfortunate.
Whether or not it's something we want to weigh in on at this point.
Yeah.
I'll accept that.
So you can get part of it. I just want to make sure you're covered.
It breaks with principles, but
I think
go, I'm done.
I think given that it's addressed to someone who's a gubernatorial candidate at this point, 2 weeks before an election, I think it's an inopportune time to be sending this to the Attorney General.
I just have one really
That's an
quick
argument.
open discussion.
I voted today.
I know, I'm speaking of voting. Thank you for voting. I think it would be worth your time and energy at some point in the future to volunteer or to work as an election judge and see what actually happens with Pitkin County elections. Because until you're actually in the fray, you don't really know. And it's amazing. And I think I've been doing it for lots of elections. And they come to me now to fill gaps. And they're really glad to have somebody that's here that has had the experience. But also, it's just a really great learning experience. And I think it'd be worth Board of Commissioners' time to do so. And if you know of anybody else who wants to volunteer, please point them in the direction of our election office.
Any further open discussion? Ted?
I haven't been to too many joint meetings, but I thought yesterday's went really well, and I appreciate
It
Jeffrey's
did do well.
efforts to keep everything on track and keep all the cats herded. Thank you. Good work.
That was the
I
mayor,
agree.
that was Kara, and
Yeah.
that was Pete.
Okay.
Yeah,
That was
Karen,
meeting,
Pete,
that was
guys
meeting,
were amazing.
that was meeting to meet, so thank
Okay.
you.
That was the
It
best
did
meeting
go
we've ever
much
had
better
with
than I
Aspen.
thought.
Yeah,
Thank you. Thanks for that.
Appreciate
really
it.
good.
Credit to
And I
all.
think we'll bring back, it sounds like we've got some other stuff to discuss with the city, so there's more on our agenda, and so I appreciate that feedback. And I want to thank Grassroots for staying late and Spaz for staying late. Thank you, Kim. Enjoy your night. We are adjourned.
Thank you.